not for the next 3 or 4 months, but for the longer term?
Yeah, so there the framework which we kind of systematically use is this kind of Trinity framework, and we have this best ideas kind of list as well. And effectively, what we're trying to do there is looking at on a bottom-up basis, where do we have conviction of revenue growth, let's say at close to about 15%, with margin expansion, with free cash flows, right? So those three kind of broad brush kind of comments. And where we are finding that is in areas like hotels, is in areas like EMS, right? Certain auto ancillary companies, we are kind of seeing that. But it's a very bottom-up specific kind of comment, Alex, than it being broad brush, say financials or industrials, any of that. It's very selective. But so names which we like, for example, in that same mid-cap list is names like, say, Delivery, which is in third-party logistics. We like Avalon. We like Amber. We like Lemon Tree Hotels. So these type of companies. So there's no commonality between those, apart from the fact that we are confident that there is revenue growth at, call it about 15%, with a margin expansion story and underlying good free cash flow generation.
If the Bay Club was listed, Aditya would say that I love Bay Club as well. But that's another level. Aditya, we are out of time completely on today's show, though, unfortunately. But thanks so much for taking the time out and being with us today.
Thank you.
All right. Well, the markets, about a 1/3% or thereabouts low. So nothing too dramatic. Nifty IT, actually, incidentally, just before we wrap up, if you can pull up the intraday of the Nifty IT, that one is actually doing well. This week, you have to admit, Wednesday, Thursday, Friday, IT stocks have actually done really well despite all of the issues surrounding the sector. But we call it a day on this leg of India Market Open, at least. So from Tamanna, Alex and me and the team that put this show together, thank you so much for tuning in. But stay tuned, because Ask Profit is up next, and the three of us and Hiral will be back for the editor's cut at 3:30.
Yeah, and on closing as well. So you'll see a lot of us today, but if you want to know what's happening with your portfolio, stay tuned after this very short break. We'll be right back.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen, and he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Good morning and welcome back to NDTV Profit. We're now in conversation with the management of Greaves Cotton. After reporting a decent set of numbers in Q4, revenue grew 21%, EBITDA up almost 48%. But post that, it's not translated into profitability growth as well. So let me pose all these questions as well as what he thinks of the company's future in FY27 to Parag Satpute. He's the managing director and CEO of the company. Mr. Satpute, thanks so much for joining in. Firstly, let me start off with this, right? Because growth across your key verticals like engines as well as electric mobility has been quite strong in terms of revenue, but hasn't translated yet in terms of profitability. If I look at Q4 as well as for the year, how do you review this period? Because there have been a lot of measures that you've taken over the last 2 years, which has continued in this year in terms of brand building for the electric business, as well as your engine business as you continue to grow the legacy one. So can you give us some perspective of how do you review the performance in FY26?
Indeed. Thank you very much for having me, Puneet. A pleasure to chat to you today and to share with you some business results for Greaves Cotton Limited. Let me start by saying that FY26 was really a defining year for our company. We moved from defining the strategy under Greaves.next into execution. And I'm very happy to share that we have seen good business results. Our consolidated revenue grew 22% for the full year, as you noted. Also, and one of the good things about this was this growth was broad-based. It was across all our sectors. Within the core businesses, our energy solutions, our mobility solutions, and industrial grew, and the investee businesses, which is the electric business largely, also showed a very strong performance through the year and in the quarter. All of this is, of course, focused on execution and delivering according to our strategy, and we believe that we can continue with this momentum going into the next year. Another important thing for us this year was to see that our focus on international business is also paying off. So the contribution of international business to the overall revenue of the core business has moved from 9% to 13% during this year. Again, very much in line with our strategy. And I'm also happy to say that all of this is translating into better margins. So if you look at the full year results, consolidated results, our margins have improved significantly. And even at the business EBITDA levels, margins are steadily improving. Now, finally, to your question about the Q4 results and whether there was some exceptional item there. So during Q4, especially, we took a view of some of the investments that we have made in technology. And one of those investments, we have decided to take a exceptional write-off, which was we could not see it translating into a commercial business in the short term. But it's a one-off item, and it in fact helps to make our foundation even more solid, and we can see a continued execution in the coming quarters.
Mr. Satpute, and thanks so much for addressing quite a bit of those key aspects, because the last 3 years before FY26, so between 23 and 25, your revenue has actually largely been stable at that 2,500 to 3,000 crores in terms of revenue. You now cross 3,500 crores, but the profitability essentially has been very, very volatile, right? Because FY24, you had that big loss of almost 300 crores. Last year was also loss-making, but reduced that materially. And this year you've done a 35 crore of profit. So given the potential, because of 1% PAT margins of so much investments into engines as well as a new brand, doesn't quite justify the current, the numbers that you're showing right now. So just if you can give us a medium-term perspective of what's the outlook that you have for profitability for the next 2 to 3 years, and what would be the measures that will be taken to ensure that profitability?
So Puneet, you pointed out yourself that it has been a steady improvement from FY24 to FY25, and now for FY26, it's a significant jump up. So as you can see, the trajectory is in the right direction. We have been working very diligently with all our businesses, and the results are starting to show. So we believe that we are on the right path. During FY26, we also further pruned our portfolio, made sure that we are focused on segments and products where we have a strong right to win and where we can have a price premium, and we are continuing to execute on that. So we believe that this steady growth we have had also in margins will continue. And now that our top line has also started growing, we can see that a lot of that will flow into the bottom line as well.
In terms of your electric mobility business, that's the other key factor, that almost for 3,500 crores of revenue, that's 786 crore for this year. You've reduced your losses from last year now down to 180 crores. But could you give us some perspective if this business currently is EBITDA break-even at that level as of now?
So the Greaves electric business has also seen a very strong year. As you can see, their revenue has increased year on year by 19%, but even more hearteningly, their volumes have been very, very strong. And the market share has gone up from 3.3% to 4.4% this year. And actually, we are in the top 6 electric two-wheeler manufacturers. So once again, a very strong performance in terms of operational execution. The company has, of course, filed for a DRHP for an IPO, and they're working diligently to continue this strong execution.
Well, that was the management of Greaves Cotton there, and they highlighted to us as well that the Greaves Cotton business will now, of course, the electric business has filed for a DRHP, so that will be listed separately and hopefully reduce some of those losses as well. But welcome back to the show. This is Ask Profit, of course. My name is Puneet Zaveri. With me is Mahima Vachajani, and we'll start taking your stock-related queries now. So if you haven't already, do start sending them on the WhatsApp number that's flashing on the top of the screen. You can also call us as well. But a very quick check of the markets as well, because we've seen today that in terms of the Nifty 50, it's been slightly more sluggish as well. So we're down to 24,230, continuing to maintain 24,300 as a key level to watch out for, at least in the near term. And we said that in the FNO setup today as well. But the overall breadth of the market has been led by some individual movers. So the mid-cap and the small-cap index has been doing relatively better, to say the least. It's in the green for now, up 0.10%, but and small caps up 0.3%. And the BSE 500 though, that's where the real reactions are coming in, at least for results today. So First Source Solutions up, Craftsman Automation again up 10%. Stock was up almost 10% yesterday on the back of results. So is Thermax on results. Sonata Software, the quarter wasn't the greatest, and other income helped the company reverse almost 30 crore of an impact compared to quarter on quarter. But stock's still up 8% at this point of time. Metropolis is up, so is Finolex as well. But on the losing side, Britannia is one of the stocks that's bearing the brunt today on the back of weak results. Escorts is a similar one as well. But apart from that, so most of the stocks in the gainers are moving in terms of the results reaction today as well. But let me welcome in our guest for today, Sameer Dalal of Natwar Lal and Sons Stockbrokers, as well as Saumil Mehta, Head Alternate Research at Mirae Asset Share Khan. Sameer, I know already why you're laughing. I hope I got it right this time around. I have been practicing.
It's high time you get it correct.
But I hope, Sameer, it was correct this time around.
That's absolutely correct. The pause before the...
I took the pause. Yes, I took the pause. I knew that you would notice it. I took the pause just in time for that. And hopefully that does redeem some of my skills at anchoring at this point of time. But Saumil Mehta, Head Alternate Research at Mirae Asset Share Khan, also joining in. Saumil, very good morning. Welcome to the show. Just go across and take the first question in. This one's from Rohit Mahajan on Zaggle Prepaid Ocean Services. He's holding 245 shares at 331. Now he's asking if he should average down now at this point of time. Somil, on this particular counter, what would you recommend? He's currently sitting on a loss.
Yeah, I'll be positive on the stock in the short term, not in the medium term. My short-term target should be around 280 and 300. These are the two targets. Keep a very strict stop loss around 247, 245. I'll be positive on this stock. It has broken out of an ending diagonal pattern and bounced back very sharply. Now it is consolidating around 20 and 40 daily moving average. So positive setup, buy on declines.
All right, so that's the view on Zaggle. The next one that we have is on BASF. Nihal Mohandas from Mumbai is asking about this counter. He says, he's asking, by the way, whether he can invest at the 3,900 level for the next 1 to 2 years. Samir, any view by any chance on BASF?
Yeah, we do have coverage on this and we are positive. The problem is valuations are a little bit on the higher side. Apart from that, we believe the entire sector is turning around. You will see prices moving up, which will allow realization, so top line to grow. Given they're integrated vertically to a little limited extent, but they are vertically integrated, they would be able to get the benefits of those higher prices. So profitability too would see a slight bit of an uptick. But like I said, 1 to 2 years might be a little short, but yes, positive. If you have a 3 to 4 year view, I think the stock will give you at least anywhere between 12 to 15% CAGR return.
Got that view, Samir. But the next question now coming in, it's on Sign Life Sciences, and A.K. Balla, who's a regular viewer of the show, is holding shares at 1,038. So he's currently in profits and he's holding 400 shares at that. So asking what he should do with this counter now. Somil, would you recommend him to book some profits or completely exit the position? What would you recommend?
No, I think you can hold on to the position. Keep a trailing stop loss around 20 daily moving average, which is 1027. A good stock to be in. It has broken out of a huge triangle pattern around 200 daily moving average. It has started a new move up. I'll be expecting much higher levels. Probably in the medium term, I'll be looking for 1200, 1250 levels. So hold on to it. Keep trailing the stop losses.
Okay, all right. So that's the view on Sai Life Sciences. We've got Udit calling us from Mumbai. Udit, a very good morning to you. What's your query about?
Good morning, Mahima. You got my name right this time. Good morning, Samir. Good morning, Puneet. My question is on Ludlow Jute. I don't have it. I am contemplating of buying it, but it's going on circuit by circuit for the last few days. Is it a good time to buy now or look for an alternative like Saviot or Gloucester? Fundamentally, which one I should go for? A jute company.
So, Udit, unfortunately, this is a 360 crore market cap company, and the problem with these micro cap companies is that you'll keep seeing these circuits because of the liquidity issue, right? So it's difficult to get a fundamental view on this one. I mean, I'm sure you'll not have a view on this one. Is that correct? It's a very small company.
I don't have a view on jute companies at all. So.
Yeah, and I mean, if I'm not wrong, it's also advisable to not reach out, like go ahead and invest or trade in these micro cap companies as well. But having said that, if you've asked, we'll try to get a chart view on this one. Somil, if you'll be able to give any view on the charts as well.
It's a little difficult because it's very difficult chart. But yes, on the upside, it has broken out of a few positive patterns, trading above averages. However, it's circuit to circuit. Yeah, either it is circuit to circuit down or circuit to circuit up. So my view would be that it will go up till 410. Probably very quickly because it's already moved up. 410 would be my target. I don't want to give a bigger target than that. But yes, positive on this stock at the moment.
Got that view and appreciate you giving a view. There's Somil as well. But go across and take the next question on Sagility. Kamlesh from Delhi is asking us this question, and he's holding shares at 42.75. So he's in profits right now. And he can hold on for the next 1 year. Samir, what would you recommend? Is it a good time to continue holding, add a little more position, or the existing one suffices at this point of time?
No, I would say hold on to the stock, right? The space that they're in medical softwares and things like that, we believe the opportunity is quite strong there. If you look at the valuation stability, ever since its listing has, of course, no doubt doubled. It's gone up from 22 or 23 or whatever it was at the bottom to about 50 and then corrected down to 42. But 20 times earnings is not very expensive. We believe growth will come. Yes, the entire space is going through a bit of a challenge, but I think this is a stock that will be able to grow over a period of time. So 20 times is not expensive when you're paying for growth. I'd say stay invested for a year.
Okay, all right. So that's the view on Sagility India. The next one that we have is on Symphony. Malika has bought 100 shares at the levels of 860. She wants to know whether to hold, add or sell. She's not mentioned the time period. Somil, your view on the charts for Symphony? Symphony Limited is what we're talking about.
Symphony, just give me a sec.
Yes, if you can try to pull that chart up, Symphony Limited. There you go. It's trading around 1.5% lower today. Yeah. Did you get the charts? Yes. Go ahead.
Yes. Got it.
Yeah.
Symphony, my view would be negative at this point of time. In the short term, in the medium term, both trading below 20, 40, 200 daily moving average. Broken a upward sloping trend line on the downside. So trend is down, broken trend line downside. So the setup is negative. I would not expect this stock to go up in the very short term, in the medium term as well. So my targets would be around 730 and the previous swing low, which is 685. So my targets will be there. So I'll suggest to exit or stay away from the stock.
Got that view, Somil. But the next question coming in on Enviro Infra Engineers now. And our viewer, Hemendra, has actually bought 1,400 shares at the IPO price. Now, his question largely being, what should he do for the next 10 years or so? What do you recommend here, Samir, on these water plays? There are a few now that are listed. What's a very long-term view on the stock now?
Okay, so this is a company we don't cover, but I like the fact that he has a 10-year view. I wish I could give an answer for this one because you rarely get people who ask this long, for this long of a period. But having said that, on the water kind of space that you're talking about, I don't even know what Enviro Infra does. So I've never studied this company. But if you're asking if it does water purification and all of those water treatments and all that, that is a space that's going to grow immensely over the next 10 years. If it is in that space, if the valuations are not too expensive and they are able to grow their business competitively with good profits, it's not only about profits, it's also about cash flows, right? Because this is a very capital intensive business. So look at those kind of things and then decide whether you want to stay invested. But I have no coverage on it.
It's more in the water as well as the wastewater treatment plants, water supply projects as well. So Samir, you're right about that key aspect as well. But that's the one on Enviro Infra. IPO price was roughly 140, so he's sitting in gains as well. So kudos to you on that investment. But and 1,400 shares as well for Hemendra at this point of time. But go across and take the next question now. This one's coming in on Mazgon Doc. For Chandrasekhar from Bangalore wants to know if it's a good time to enter this stock right now for the long term, and if this is a good price. Samir, what would you recommend?
So, it has corrected from the peaks. So the valuations are a little better off. We do believe that the entire space of shipbuilding is going to keep growing over time as India needs more of their in-house domestically produced ships, and the opportunity is quite large. Valuations are a little bit expensive. I would suggest staggering investments. See, I've been wanting to say that the stock is great at 1,800. Am I going to get that price? Probably not, given the fact that, India's growth story plus, there's so much money flowing into the system that it may not come off. But yes, slowly keep adding on little by little small lots over the next 6 months to a year. You'll get an average. And over the next maybe 3 years, you will make some returns, but don't expect anything major or any fireworks in the short term.
Okay. All right. So that's the view coming in on Mazgon, but it's time to take a look at the F&O space. And we have Sharad joining by to give us some perspective as to what the cues are indicating. Sharad, over to you.
Thanks a lot, Mahima, for that. And largely, we see there was a little bit of a gap down opening initially, but we're seeing that sell-off actually maintaining, and it's still in the red when it comes to Sensex and even BankX. Of course, the VIX has also gone up, a little bit of geopolitical tensions, but what's working is, of course, Adani Post, the top gainer in Sensex. The stock is up 3%. Asian Paints, HCL Tech also doing well, but the sell-off is a bit on the higher side, at least for the benchmark indices. This of course includes Axis Bank, HDFC Bank and Ultratech Cement as well. But on a positional basis, we might be going under a level of consolidation as well. And remember, today is the last trading day of the week. Avoid to have larger positions because you never know on Friday, post-market hours and Saturday, Sunday, we might get some announcements in the geopolitical front. But let's come back to the stocks. Long build-up is happening from Nuvama. Good build happening. Expect a corporate development in this soon. NBCC also a good buying happening. The stock is up almost 5%. Volumes are doing well. And apart from this, looking at the short covering candidates, if you could just pull out the short build-up candidates, we have Britannia here. There's an earnings impact at play, and Voltus also a little bit of profit booking coming in this counter as well. Apart from this, the long unwinding, we have Dalmia Bharat and Samman Capital. And lastly, I'd like to point out the short covering candidates. This includes Coforge and Persistence. A good recovery happening in the mid-cap IT space as well, even though the valuations are questionable for both these companies. So these are the important stocks which should be in your radar in the F&O space.
Thank you so much for getting us those details. We've got our next caller, in fact, lined up. Avi is calling us from Kolkata. Avi, very good morning to you. What's your query about?
Hi, good morning to all of you. So I have got 1,000 shares of Senco Gold bought at 284 rupees. So I'd like to know whether I should book profit today, or or if I can hold it for the next 1 year, and what could be the target, something like that.
Okay, got your question, Avi. I'll take this up with Samir. Samir, he's sitting on handsome profits of around 72,000 rupees, considering this is Kolkata based, and when Sharath spoke to the CEO as well, he did mention that he's very bullish when it comes to now expansion in West Bengal as well. So your overall view for the next 1 year, can you continue to hold for further upside?
So I definitely believe this is a space that is going to grow, right? We've been positive on some of the other companies in that similar space. We believe the formalization of the economy that is happening, and Senco Gold is part of that, will see traction. We will see sales growth at the store level, which will lead to operating margins. Now, the problem is, are we going to see this all within 1 year? That becomes questionable. If you have, again, a 2 to 3 year view, I'll say stay put. Add a more also at this point of time if you have a longer term view. The problem I face is that over the next 1 year, what's going to happen, which is, we discuss stocks, but sometimes you got to discuss the economy as well. I see inflation peaking its head up because at some point of time, the government is going to up its petrol and diesel prices, and that is going to be inflationary in nature, which could lead to some amount of slowdown in the near term. So 1 year is a very short period for me to say what is going to happen. But if you have a 2 to 3 year horizon, I say very much stay invested and add on.
Got that view, and fair point as well there, Samir, on the discretionary demand could get impacted. Could see a similar impact on auto as well, as we do see generally when the economy is in a downtrend. But go across, and take another question now from another caller actually from Hyderabad. And Chandu has a stock query for us. Chandu, very good morning. What's your query?
Very good morning to all. Yeah, so my query related to, I have like a 30 lakhs funds actually to invest actually. So I regularly follow your channel, and Samir also, I follow Samir, whatever the suggestions and all. I invested like SW Solar at 5% of my portfolio.
Wow.
And Keystone, the developer also started investing. So the other stocks I need to invest. So is the best time to invest Keystone at 5% of portfolio, and other stocks also I want to invest around 30 lakhs.
Got it. Well, so okay, you want to invest across sectors and stocks, and you have quite a bit of amount to do that. Got it, Chandu. But Samir, it didn't take us long, around 20 minutes to get to the first SW Stola query. But that's almost 5% of his portfolio. But he also wants to invest substantial capital now. What would you recommend his strategy to be?
That's a very good question. And first, let's address the SW Solar. The stock is started to perform. I would love to have a technical view because I do follow technicals, but I'd love to have a technical view later from him, from our technical analyst. But having said that, fundamentally, we're just waiting for the Reliance orders to come through. Once that comes through, we are sure the stock will re-rate itself and move up. I will say in the next 1 year, I'm expecting over 300 rupees, okay? That's the first part. Now, second part, there's a question that he asked, a very good question, 30 lakhs to invest. Yes, diversify, make a portfolio of 10 stocks. You want to push it up to 20 because you want 5% in each. That is also fine. There's no problem in that whatsoever. So be more sector agnostic in the sense, look at multiple sectors. I would have 10 to 15% in banking and NBFCs. I would put 10 to 15 in consumer discretionaries. So stocks like Trend, stocks like Bata, stocks like Metro Shoes. In the banking and financial space, we've always said IDFC First Bank is something that we like. IndusInd Bank is a re-rating candidate. HDFC Bank is the largest player in the market, available at not stress valuation, but deep discount to its historical valuation. So that is something one can buy. In the auto space, and put another 15% between auto and auto ancillaries. So our top pick in the auto space right now, top two actually would be Tata Motor PV and Mahindra and Mahindra. Mahindra and Mahindra gives you a kind of, I would put 10% there for the simple reason that gives you so many businesses. It gives you real estate in the Mahindra lifestyles. It gives you the hotel business in the Mahindra holidays. It gives you the finance business in Mahindra Finance and the tractors and the commercial vehicles. So it's a great investment to have over the next say 3 to 5 year period. Then you can look at hotel sector. Indian hotels is something that we like. In power sector, Sterling and Wilson you've already got. I would say you can look at something like a Suzlon Energy. You can look at something like an NTPC Green. You can look at transformers and rectifiers. So build a portfolio, putting 5 to 10% in various sectors, and then make like a nice portfolio and stay invested for 3 years. I think this is money to be made. So this is probably one of the best questions that has been asked. And I wish we could do a show and address how portfolio building should be done.
We have been tinkering with that a little bit, Sami, at this point of time as well. But, thanks so much for giving us that detailed response. Saumil, sorry, because of paucity of time, just a 30-second view on the charts, if you can give on, before we start the rapid fire round on Sterling and Wilson.
SW Solar.
Yeah.
The trend is down. Definitely the trend is down. I don't want to disappoint anyone, but the trend is down. It's been down for a little while now. However, the positive parts are that the quarterly positive close is going to come this time. It has bounced back from 150. So the base has become 150 now. I'm not expecting the stock to go below 150. That's the first thing. If it crosses above the previous swing high of the quarterly chart, which is 253, 254, then the trend reverses back. Your 200 daily exponential moving average is at 232, 233. So that will be also a very crucial resistance. So I think if it crosses about 253, 254, I'll be very positive. But at this point of time, it is trading below 200 daily moving average. Trend is down on monthly charts, weekly charts. So I'll be a little negative right now.
Well, so those are some of the key levels that Saumil has given, that once it crosses there, and you already know the fundamental view if you've been watching the show. But let's go across and start the rapid fire round in this edition of Ask Profit. The first question is on Clean Science. Ramesh has bought into 878 at 878 rupees per share, 100 shares, Saumil, and he's asking a 3 to 6 month view on Clean Science now.
See, I'm positive on this stock. I'll be expecting a target of 960, probably 980 levels, not more than that. Positive at this point of time. Keep a very strict stop loss around 812.
Okay, the next one is on South Indian Bank. Shankar from Bengaluru wants to know if this is the right time to make an entry into this counter considering the recent earnings, but he's looking at a short-term perspective. 1,000 shares is what he wants to invest in. Saumil, your view?
In the short term, no. Avoid the stock. In the medium term to long term, yes, definitely a good stock to be in.
Good. Well, the next counter that's in our focus is Idea Forge. Now, our viewer Neha is holding shares at 590. It's in a big up move in this week itself. Saumil, would you recommend her to book her profit now?
Nah, you can keep holding on this stock. It has crossed above the previous swing high of quarterly, monthly charts. Great stock to be in. Stay invested. Keep trailing stop losses.
Okay, the next one is on Cupid. Our viewer Nandagopal wants to know if he can go ahead and buy and what's the target for this year end. So, Saumil, your view on the charts?
See, it has already run up a lot. So I would be expecting short to medium term book profits. In the long term, you can keep trailing your stop losses at the averages around 100, 102 levels would be the stop loss, and keep holding. But short term, medium term, please book your profits.
Got it. Well, the next question is on Suzlon, bought at 46 rupees. And the question largely being, what should he do with this counter now, Samir?
Hold on.
Okay, the next one that we have is on Canara Bank. Our viewer Shiv Kumar has got 30 shares at the levels of 162. Wants to know if he can continue to hold or shift to something like an SBI. Samir, your view?
I think hold on to Canara Bank. Look, you bought it at the highest price. In fact, I would say even average out a bit because now you're getting it at a better valuation if you're more positive at 162. Bank is doing well.
Vijay from Chennai wants to know view on RBL Bank Sawmill. He wants a short-term target.
RBL Bank positive short-term target would be around 380, 390 levels.
Okay. The next one that we have is on Tejas Networks. Satyan wants to know as to which one between Tejas Networks and Moschip is better from short-term perspective. Sawmill, your view on the charts and possibly targets as well on the charts?
See, both are looking good to me, no doubts about it, but I will go with Tejas Network, better price, just broken out of the triangle pattern. Target would be around 625, 650.
Sriram Raguraman from Chennai holds 5 shares of Aether Industries at 903. Samir, should he continue to hold this counter, add more?
Hold on. Like we said, the chemical sector is turning and this will...
Okay.
This is Aether Energy or Aether?
No, Industry.
This is the bike company.
This is the Aether Industries, the chemical one. I think you got it right the first time.
Yeah.
Okay, the next one is on BEL. Our viewer is asking as to what time frame will it take to hit the 480 to 500 levels, looking at the overall percentage gain going forward. Saumil, your view on the charts?
Probably 500 levels would be at least 6 months from here. I'll be expecting a sideways correction, but yes, very positive on the stock.
The next one coming on HPCL, IOC and BPCL. Our viewer Venkatraman holds 500 shares in these 3 counters. Samir wants to exit 2 but keep the third one for dividends amongst others. What should those be?
Sorry, he wants to exit 1.
Wants to exit a couple of them from HPCL, IOC and BPCL, but wants to keep one of them.
So for me, I think BPCL is the one to hold on to. Yes, IOC is the larger player, but this is a sector I'm not very fond of. So I would say if you want to hold BPCL, but that would, out of the 3, that was the one I would suggest.
Got it.
Hello and welcome. You're watching NDTV Profit. Dabur is in focus on the back of its Q4 numbers. It's been a great quarter's volume at 18 quarter high, revenue at 15 quarter high. And to, kind of discuss as to how things have fared in FY26 and what lies ahead in FY27, we're now joined by Ankush Jain, who's the CFO of Dabur, joining us now. Ankush, thank you so much, first of all, for taking out the time. My first question is with regards to volumes at 18 quarter high, if I'm not wrong, at that 6%. And this has been the story for FMCG this quarter, right? Volume-led growth. From here on, how are you expecting volumes to be in FY27? Because I understand that there would be price hikes. Do you think that volumes from 6% can go to that high single-digit number or maybe early-digit number?
Yeah, first of all, good morning to you and to your viewers. Before I get into state of the volumes, some bit of background about the quarter 4 result.
Sure.
We posted a strong result in terms of overall 7.3% growth. India FMCG 9.5%, near double digit, backed by strong volume growth, as you said, 6%. And this was driven by our HPC, which grew by strong 17.5%. And also our healthcare saw a rebound, which was almost 12% ex-glucose. So it was an overall good performance. Even our international business grew by 4%, despite heavy headwinds across Middle East. Now coming back to volume, yes, sequentially we are seeing a recovery in India, especially in volumes. And even last quarter was 4% volume, this quarter 6%, so 2% incremental volume even from last quarter. And going forward, we see, given that a lot of fiscal benefits and fiscal benefits from the government in terms of GST cuts and income tax cuts, the volumes have started increasing overall, mostly in HPC and even in healthcare, and even our food and beverages saw a rebound this quarter. the beverage business has come into positive territory after a couple of quarters, and even as you rightly said, volume is an all-time high after 18 quarters of 6%. So this shows a positive momentum, and this is backed by strong execution on the ground, gain in market shares, and distribution gains across the region and state. Even some of our highly competitive categories like hair oils, we grew by 24% gain, almost 150 basis market share. Even toothpaste, we gained market share. So everything is backed by market share gain, which shows a strong, momentum. Also, we have stepped up our media investments to reach more consumers, both via digital as well as traditional. So I think we are a bit optimistic going forward from both volume and value perspective, and we see that at least in Q1 and Q2, where we have a near-term visibility, we see strong results in terms of top line going forward. Yeah.
Okay. And what about volumes, Ankush? Do you think early high single digits is possible in FY27?
Volume, in FY27, we are at an aggregate level in terms of volume plus value. We are targeting high single digit or low double digit volume. It will be a combination of volume and value, while it can be a mix of both in terms of 50% each. So I think 5 to 6% volume and 5 to 6% value. While this is a moving part, since because of inflation, we will be taking some bit of calibrated price increases. Hence, while the overall number might still remain high single digit to low double digit, but yes, things to see. But I think things are becoming better as we see, sequentially.
Fair. Ankush, price hikes, just want to get a sense. You've already taken price hikes of around 4% if I'm not wrong. Going forward, if you can give us some range in which you are expecting price hikes in Q1?
Yeah, so while we have taken, as you rightly said, around 4% price increases, we are in the process of calibrating, more price increases shortly, because the inflation is going much beyond, what we expected at the beginning of the year. So we'll be taking another 2, 3 to 4% as we see during the course of the year. And our philosophy is very clear, category to category, every teams are expected to take price increases to maintain or protect the gross margins, and any upside is then reinvested back in either demand generation or in distribution expansion or in digital capability building. So we will be taking price increases very in line with competition, and wherever we are market leaders, to protect our margins.
Okay.
So I think overall in the year should be around 5 to 6%. In aggregate, yeah.
Okay, 5 to 6% of overall price hikes in the entire year.
During the year.
During the year, got it. The other aspect, the interesting takeaway from a con call was that even in your press release, you've mentioned that the gap between rural and urban demand is kind of narrowing, right? So just want to get a sense in terms of the observation, because when you say narrowing, is it the rural demand which is not picking up very fast, or is it the urban demand which is picking up very fast? What is the observation overall in terms of where the markets go right now?
Yes, I think if you see the earlier gap between rural and urban was, rural was higher by almost 500 days. But if I see March 26, which are the latest published numbers, indicated data, we see the gap has narrowed down to almost 340 bits, which means the rural has slightly, it's though growing, but at a lower rate than urban, and urban has started picking up. And if I, rewind back, this is mainly because of the GST cut and, the income tax cuts, which has now started going into the hands of at least, increasing the disposable incomes and putting more money in the hands of consumers, especially urban. So we are seeing, uptake in urban, while rural is also growing, but the gap is narrowing. Yeah.
Okay.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches.
Alright, welcome back. You're watching Ask Profit here at NDTV Profit. On this side of the show, we are also joined by Devin Mehta, who's the manager of technical and derivatives analysis at IDBI Capital Market and Securities, joining us now. Devin, thank you so much for taking out the time. And viewers who are tuning in, you can either give us a call or send us all your queries on the WhatsApp number that's flashing on your screen up there. And Anjali has done the same. Anjali is calling us from Hyderabad. Anjali, a very good morning to you. What's your query about?
Good morning, Mahdi. So my query is regarding ONGC. I'm holding 700 shares at the rate of 275. So the stock hit all-time high recently, but unfortunately I couldn't able to sell. So shall I wait for the similar price range, or I should sell now?
Did you look at the charts while buying it, Anjali?
Yes, this is for short term I bought, maybe 3 to 4 months. I bought it 2 months back.
Yeah. Got it. Okay, got your question, Anjali. I'll take this up with Devin. Devin, the problem with these counters like ONGC is that you have to, look at it with correlation to crude prices as well, right? What would you suggest for the next 3 to 4 months, considering that, crude prices are volatile right now?
Correct. So overall, after this stock was bought 2-3 months prior, the stock went up towards 308 odd levels. And currently it has corrected as crude oil prices have slightly come down. But the exact support where I can see is exactly near the buying cost of 275. So I think one should hold with a trailing stop loss of 275. If it closes below 275, then only one should try to exit from this counter. Overall structure remains positive on the higher side. The immediate resistance is placed at around 293 levels. So 293 can be the first target. One should try to book partial profit at 293 levels, and further one can hold for the next target of 308. So yes, overall structure remains positive. One can hold with a trailing stop loss of 275.
Got that view, Devin, and welcome to the show. The next question coming in on Techno Electric. Our viewer Kesha from Chennai is holding 30 shares at 1280 and wants a 2-year view. Samir, do you track this counter and any view on the stock?
Yeah, hold on to the stock. Look, we've been saying for a while that the entire energy vertical is going to do extremely well over the next 5 years. India has got a real wake-up call with this oil prices moving up the way they did in the recent past. We need to reduce our dependence on that, and we need to move more towards clean, green energy, which needs transmission line setup, and Techno Electric does that. Yes, not cheap, but like I said, in India, you have to pay for growth. So buy it if you don't have it, and if you have it, hold on to it.
Okay, all right. The next one is on IRIDA. Prashant from Hyderabad is holding 120 shares. He's saying that he's currently sitting on a loss of around 42%. He says that his average holding time is for the next 1 to 2 years. So he wants probably a fundamental view on this one. So Samir, I'll stick with you for IRIDA. What's the view like?
You found one stock that caters to the power space, which I find something that is not worth investing in. It's a great business. What they're doing is they're lending money to renewable energy setups, which is a growing space. But that doesn't mean that the competition is not there. Just because of the name, people went gung-ho on the stock and ran it up, I think, all the way to 300. That is not the right price for it. And I think even at 134, it's trading at maybe 2.5, 3 times book, and you have PFC, REC trading at 1 time book. I much rather have those. So my suggestion, convert it to PFC or REC. The conversion ratio is already there. See which one's working out better. I think REC is trading at a slight discount. So if you buy REC, eventually you'll end up with PFC. These are high dividend paying companies, great growth opportunities. We think this is going to re-rate as well. So these are the stocks that we would suggest.
Got that view, Samir. But Rajesh from Hyderabad actually has the next question. It's an interesting one. He wants to invest into Bharat Forge, and he probably would have caught the management commentary on our channel yesterday as well. When we spoke to them, we discussed the results as well, and stock was up 5% today post the results. Now, his question is that the company is trying to increase its capex as well as in defense, and for data centers as a key opportunity. They're also putting up new plants for explosive. But Samir, any view that you have? Because he's asking a 5-year question. Stocks run up substantially in the last 6 to 8 months, despite or maybe on expectations of earnings being better in FY27. What's your view on the stock?
So first up, I didn't think the earnings were that great, to be very honest, right? I thought they were subpar. Now, the opportunity for them in the defense space is good, but what is the defense exposure of the company compared to what they're trucking and forging for the auto spaces, right? So we conveniently want to, because defense is the key word, everyone wants to be a part of it, the stocks have run up. But that is contributing to maybe 15 to 20% max of the top line at this point of time. I don't have the exact numbers on me. And on the profitability, even smaller. Now, if the US trucking business sees a slowdown, and that is where the key, top line and profitability comes from, if that takes a hit, then I don't think it justifies just because you're going to be putting in capex for defense, for explosives, for all of this. All of the investments that you do take time to reap benefits. It's not like today I put 100 crores, tomorrow I start earning 15% on it, and I start adding to my profit. It doesn't work like that. It takes time to scale that business up. So for me, at this point, valuations are rich. I think people have looked at the wrong side of the business. I think there is going to be pain that comes from the export business, especially in the autos to the US for Bharat Forge. So for me, at this point of time, I would avoid the stock. If it comes closer to 1400, I'm talking of, a 600 rupee correction. So we're talking about 30% correction. That is where my comfort level will come, and I would say it's a buy.
Okay, all right. So that's the view coming on Bharat Forge. The next one is comparatively a small company, and we don't get a question on this a lot of time. It's on Tasty Bite. Our viewer Sriram from Chennai has bought it at an average cost of 10,800, so at elevated levels, and 20 shares is what he's bought. He says that it seems to be trading about the 200 moving average, 200 simple moving average, and wants to know if he can average at the current levels and see it crossing 11,000 levels. Devin, any view on the charts?
I think from last 2 trading sessions, the volumes have gradually increased and stock has crossed its 200-day exponential moving average above 8,150 levels. I think it is good time to buy this particular counter. It is showing some sign of a reversal. So one can average, but I think there should be a strict stop loss with this. Support on the lower side is placed at around 7,450 levels. So I think 7,450 can be the stop loss for this particular counter, and one can look for averaging this particular stock at current market price.
Got it. Well, Ellen Parkhe, who's also a regular viewer of the show, has sent across an interesting query. He's holding 40 shares of Abbott India, but he's bought it way back in 2017 when the stock was trading at 3,700. Now, of course, he's taken away some, he's booked some partial profits. Let's pull up Abbott India very quickly. and you'll see that he's booked out a lot of his investments already. So at 3,700, he's almost up 8x on that price. And he's a retired professor, aged 70 from Hyderabad, and asking if he should continue to hold or discounter or book out some profits. Now, Sameer, I think it's a day of good long-term investments or long-term investing for now, and I think we've got a lot of queries on that. But what would you recommend Mr. Parkhe to do at this point of time?
Yeah, so I love to hear long-term investing, because eventually this is a place for investment and not a casino to make gambling black or red bets. Will it go up or won't it? Anyways, having said that, Abbott, great counter, continue to hold it. Their products on the medical FMCG side are doing really, really well. We think the opportunity is still extremely large and going to keep growing. Yes, trading at about 35 times trailing earnings. But if the company can post a 15 to 18% top line growth and margin expansions or margins remain the same and operating leverages play out, it's trading at a PEG of about 1.6. So it could probably move up over a period of time. So stay put in it.
Okay, we've got Murli who's calling us from Hyderabad. Murli, very good morning to you. What's your query about?
Good morning. My query is on IRFC. I had about 500 shares and I sold 100 plus 7, touched around 150 plus. And I still have about 375 shares at an average of 39. So I wanted to know when it would reach the next high in about a year's time.
In about how many years' time?
In about a year's time.
In about a year's time. Okay. I'll try to get you a technical view on this one, Murli. Devin, your view on IRFC, what do you think the charts are indicating in the next 1 year?
So if we look at the IRFC's chart, it has shown a good correction from higher levels, but currently it has moved above its key important moving averages, the short-term and medium-term moving averages, and has been trading into a range from last 5 to 10 days. On the higher side, 107. On the lower side, 102 is the range which it is trading in. So I would recommend to hold this particular counter with a trailing stop loss of 100. If it breaches this particular level, one should try to exit, as the trend will again go down, and there will be a downward trend continuation after it breaches 100 levels. Whereas on the higher side, stock can move towards 123 levels in the coming days. So overall structure remains positive for short to medium term. 100 can be the trailing stop loss for this counter.
Got it. Well, let's go across, take a next caller very quickly from Delhi, and Sanjay has a stock query for us. Sanjay, good morning. What's your query?
Yeah, my query is regarding Paras Defense. The day I bought on 24th of April, it was on 849.
Okay.
Since then, it is down and down and down. Yesterday, it came up. It came up. And now it is a little bit up from a buying price of 849 rupees. I'm looking a short-term target of 900 rupees. Would I be able to get it in a short while, or shall I exit?
Devin, what would you... Profits. Got it. Well, Devin, what would you recommend on Paras Defense?
Structure remains positive for Paras Defense. It has given a strong breakout above 770, and it is heading higher towards 930 levels. So definitely one should hold this particular counter for the target of 930. One can definitely keep a stop loss of around 790 levels, which is a strong support and 20-day exponential moving average. So I think definitely it is an hold with a trailing stop loss for the target of 930.
All right, so that's the view on Paras Defense, but time for our rapid fire round. Devin as well as Sameer, try to keep your answers as short as possible to buy, sell and hold. The first one that we have is from Ekambarai, who's asking about NCC. He's got 400 shares at the levels of 203. What's the charts? What are the charts indicating for this one? Can you continue to hold, Devin?
Yes, the counter is hold. NCC looks positive. On the downside, 160 is the strong support. It's 20-day exponential moving average.
Right.
It can move higher towards 180.
Okay.
But the next question is from Prashant, and because of paucity of time, couldn't take the whole question because it's quite big. But he wants to know, Sameer, on the power equipment space, the likes of ABB, Siemens, GE Vernova, CG Power, anything that you like from that space?
So Siemens is good, but the stock has just recently run up. CG Power also very good, and transformers and rectifiers is the one that I like a lot because it's down quite a bit.
Okay, the next one is on Patanjali. 900 shares bought at the levels of 475. 3 months view on this one. Ansh from Australia wants to know. Deven?
Patanjali overall, the trend is negative. I think one should try to exit on every bounce.
Got the next question coming in now. It's from a viewer Bala Subramaniam, and he wants to know a view on ACC. Samir, he's bought shares at 2561. What should he do?
Hold on. I think cement will do well, and it will eventually become Ambuja, so you will do well.
Got it. And of course, the standard disclaimer that the stock we just discussed is part of the Adani Group and shows the channel that you're watching. Let me go across, take another query from Pradeep from Bangalore on Black Box. He's holding 500 shares at 350. Deven, do you track this counter by any chance on Black Box? And a view for Pradeep?
No, I do not track this particular counter.
Okay, the next one is on Eternal. From a short-term perspective, Padma from Bengaluru has bought at the levels of 251. What should she do next? Deven, your view?
I think Eternal can be holded with stop loss of around 242 levels. There's a strong support. Upside can be seen towards 270.
Got it. Well, Bhavit had a question on HDFC Bank, which Samir has answered. But Samir, also on Ramco Cement at 951, he's holding shares. Should he continue to do that?
I haven't studied Ramco recently and the valuations, but cement space, I think, will over the next 2 years do well. So hold on to it, I think.
Okay, Coforge for the next 13 months. Is it a good bet? Mahalakshmi from Hyderabad is asking. Deven, your view on the charts?
Yeah, I think it can be purchased on dips around 1320 levels if we get any dips. The target for the coming month is around 1430. So yes, definitely can be holded at levels and purchased on dips. Support is placed at 1240 levels. So stop loss can be 1240.
Got well, Jose from Kochi is holding on to APL Apollo and he wants to know a view on stock. Samir, by any chance, do you track it?
Yeah, I think one can hold on to it. We've seen some amount of correction, but look, valuations are expensive, but hold on. I think
Okay, Union Bank, 3,000 shares bought at the levels of 179, already sitting on a loss of 45,000. From a long-term perspective, can our viewer continue to hold? Siva is asking this question. Samir?
Absolutely. Banking very positive. Union Bank also will do well, so hold on.
JSW Energy at 606, bought by B. Soumya Deven, and asking a immediate expected target price.
I think the stock can be holded with a stop loss of 950. Expected the target is around 590 and further above that is 605.
Okay, the next one is on L&T. Our viewer has bought at the levels of 3,200 odd levels. Wants to know if we can continue to hold from a long-term perspective or replace this with something else. Samir?
So L&T, premier company, hold on. Short-term, not the best because they're going to be finding difficulty in growth because of the problems in the Middle East, but long-term, 3 years, hold on, I think it will come back very strong.
Got it. That is the end of the rapid fire as well as this edition of Ask Profit. Samir, as always, thanks so much for joining in and giving us your views. Deven, thank you for all your views on the technical setup as well. But viewers, that's all the time we have on this edition of the show. Thanks so much for watching. We'll take across all the other stock-related queries at 2 p.m. in the afternoon edition of Ask Profit. So stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Reports with me, Gauri Dwivedi, weeknights on NDTV Profit.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis.
Hello and welcome to all of you, and now is the time for KYC. This is the hottest show where I get you one of the best companies where you can analyze and is there any alpha or not. We try to decode that. But before decoding that, there are some hints. Give it a guess. The first hint, it's a Navi Mumbai-based diagnostic company. Of course, the headquarters is in Navi Mumbai, especially the Turbe area. The second hint I would like to give you is recently the company came out with its numbers also. And I know a lot of diagnostic stocks are buzzing in trade. So, nevertheless, strong Q4 numbers also coming in. Let me give you one more hint. Try to guess it. From March lows, the stock is up 35%. And interestingly, there is an interesting angle to it. The FIs, DIs, they have increased their stake in the last 2 years as well. A lot of restructuring has also happened in the company. And I'd like to give you one more hint. Try to guess it. They recently appointed Madhuri Dixit as the brand ambassador. Try to guess, and I'm going to give you the company's name. There are a handful of diagnostic companies. It must be getting easier for you to guess it. But if not, don't worry, I'm here. The company in focus is Thyrocare Technologies. They're pretty much interesting. There is a little bit of, you could say, there's a brand change also there. And the company itself looks a bit different from last time when we had a chat with the management. But there are a lot of questions to be asked. The first and foremost, earnings kaisa tha? वो आगे क्या बढ़िया रहेगा? That's the big question to be asked, and that is why I'm going to ask the management the outlook for FY27 and the Farm Easy integration. What are the processes and the timelines everybody is looking at? And overall, we'll be asking the growth targets for the franchisee business, how they are moving forward, and importantly, the growth numbers for it. International expansion, एक ही lab है इनके पास टांजानिया में, but ये क्या नया market खुलेगा? That's the big question to be asked. आगे बढ़ते हैं. Let's see what else is there. It's of course genomic, specialty diagnostics, and the key launch pipeline ahead. They are moving into newer businesses also, because at times we talk that the pathology and the lab business is definitely there. But there's a question at times investors ask, is it commoditized? So we'll try to see the specialty angle to it. Of course, the preventive and the lifestyle package, what's the momentum looking like? What are the products coming in? What are the new areas of this happening? And to decode everything, we'll have Rahul Guha. He's the MD and CEO of Thyrocare Technologies, where he'll answer our queries and also give us some hints on why the diagnostic stocks are back in business after almost 2 to 3 years of pain. But company समझते हैं क्या है? We know that it's a diagnostic company, but इसके अंदर क्या है? Is it just a diagnostic company? No, there is something more to it. Let's go and understand that. This is of course a Navi Mumbai-based diagnostic company and has 40 labs in India and 1 lab in Tanzania. It's pretty much interesting to talk about. But किस तरह धंधा करती है कंपनी? एक होता है फ्रेंचाइजी देने का, दूसरा होता है आपका पार्टनरशिप्स के साथ. Of course, these are asset-light models which I'm talking about, and the D2C models, even though the revenue subscription or the revenue contribution, is on the lower side. Let's also talk about the other key factors to look at. The services, there are other services. This includes ECG, genomic testing, insurance-related products. आपके घर में आके भी जो है checking हो सकती है. Of course, you must have understood about the diagnostic that you have to go, but there are some services which can be done at home also. Quarterly attractive franchisee, that's the count coming in at 10,800, and the processed is almost 6 crore, 6 crore 59 million to be precise for the screening and investigations. That's pretty much interesting. And recently they changed an object clause also in the company. That means more ancillary businesses, data related businesses in diagnostics. That's where the things look. But Q4 numbers kaisa raha, and that is why most of the companies have done well. Strong performance coming in both financially and operationally as well. And of course, they are welcoming commentary coming on the lab expansion and the new offerings. Street wants to know a little bit more about this. This is what we'll be asking the management, because they have done well when it comes to the numbers. The gross margins, that improved by almost 113 basis points year on year. So definitely the margin outlook trajectory is something to watch out for. And the revenue segment, how it actually works. The franchisee is still at a higher side of almost 61%. And if you get that for 34%, that comes in for the partnership segment. Very limited, almost 5% is for the D2C segment. So this is the entire revenue contribution for you. And how the growth has happened in the fourth quarter, that's also pretty much important to understand. And franchisee partnership, this is very small. So look at these two when you're analyzing, and they've done really well. Both of these segments, 20% plus growth. But why are diagnostic stocks, all of them rallying in trade? There are some reasons for it. There's strong Q4 numbers. ये कंपनी लीजिए, मेट्रोपोलिस लीजिए, विजय डायग्नोस्टिक्स, सब ने अच्छे नंबर्स लाए हैं. प्राइसिंग प्रेशर जो था बाजार में after 2 to 3 years, that is bottoming out, and that trend we have already caught and explained to you earlier in the months at NDTV Profit. The price hikes is likely to happen in FY27 for diagnostic stocks, and importantly, the benefits of consolidation. So you get the larger players getting more market share, and that's what we are seeing that's happening. Street is bullish on for the foray into the high margin business, and that is where we are looking at diagnostics as some kind of a value creation as well. But to put things in perspective, let's understand how we judge a company in KYC. There are a lot of ratings which we follow, and largely I have tweaked a little bit of ratings. यहाँ पे operational parameters मैंने ले लिया है. If you are a regular at KYC, this is a return ratio parameter. Of course, these three numbers we never change because this is the holy grail of financials. Apart from that, let's look at the street cred, the shareholding pattern, how things have moved, and of course, I'm comparing them 4 to 5 major players in the diagnostic space, where to understand, is there any valuation here? And of course, the outlook, what the management expects going ahead. Of course, we'll try to get some quantification number also from the management when we start talking with them. The first one, income statement. Let's get in that parameter to understand what's happening here. Largely, it's a decent up move. Bottom line numbers, it's a 37% CAGR coming in the last 3 years. EBITDA also almost touching that 30% mark. So operationally, some benefits are definitely coming in when it comes to this company. Also, the Q4 numbers have been really strong, and that's what the street is awarding the stock. And look at the growth which has happened. Like a turnaround हुआ year on year basis पे आंकड़े देखिए 123% year on year basis पे जो है growth देखने मिली है. तो nevertheless, the key numbers to track, EBITDA, net profit, they have done well. Let's look at the margins also, because that itself has done well, and the margin trajectory was earlier between 23 to 28, but now it's hitting that 30% mark, 32%, and now it's at 34%. That means there is a good strength coming when it comes to the margins. Abhi kitna upar jayega? That's what we try to understand with the management. Net income statement is a strong thumbs up as of now. Balance sheet, let's have a look at that. and it seems very nice. There is no borrowings, it's zero borrowings pe hai, and now it's well capitalized also. If you look at the cash balances, 68 crore rupees, and of course there's a good backing and fund infusion coming in the company. Because of that, the balance sheet remains rock solid now. आगे जाके acquisition करेंगे, expansion करेंगे, that's what we'll be looking out for. So income statement has been good, balance sheet has been good. Let's have a look at cash flow. Where does it stand? And overall, that has also improved. Earlier, this was a net operating cash flows which was coming in. This was at 168 crores, but overall it was on the negative side. That has turned in, and see, overall the momentum has been really strong. If you just compare the last 2 years, of course the 9-month FY26 numbers it's also to look at, but net this seems really strong as well. So that is where the growth momentum is coming in. So तीनों ही financial statement के आंकड़े में, income statement, balance sheet, cash flow, all the things the company has passed with flying colors. But let's go into more details. Let's try to understand the operational parameters this time I have taken, and this is the FY26 numbers I'm talking about. And when you judge a company in the diagnostic space, you need to have these important metrics, and this is something which I'd like to put it out. There's a revenue per patient, tests performed on the patients, total patients, and the active franchises जो इनके operational धंधे में काम आती है. और look at that, most of them have done well, at least these three. Revenue per patient, of course there was a competition in the industry, pricing को लेके, discount को लेके, so that's why this number is not very high, but other things are doing really well, and these are the particulars to look out. So that is a strong thumbs up coming in. But shareholding, let's see what's happening here. Promoters, of course, diluted the stake last year, and now it's coming in at 61%. But on the other hand, one good positive thing about the stock, the FIs and the DIs, is the increase in their participation. March 24, it was just 3%, and DIs, it was just 15%. But look at the story, how it's changing. Now that has almost doubled to 5%, and DI has also increased the stake by almost 6%. So FIs, DIs are lapping up. Public is decent enough, and that shows the faith in the company or the institutions. But net to nullify the promoter stake sale, I will be giving this a shareholding. But apart from the shareholding part, let's talk about how things are moving when it comes to the street trade. Kitna paisa bana? That's the big question we always ask. And from March lows, definitely all the diagnostic stocks have done well. So has the company. The stock is up 35%. From 2025 highs, it's still down 11%. And if you are holding the stock for 1 year, congratulations, you have made almost 50% plus returns. But there is a bad news. The bad news is for the last 5 years, if you are holding the stock, just 33% returns have been made. So a really long-term investor technically hasn't made that much money as a short-term investor has made in this company. So to balance things out, I would be giving this a neutral rating when it comes to the street cred. But let's talk about the valuations and see, is there any kind of a valuation comfort with its peers? Well, technically it sounds quite similar. Metropolis is cheaper, Dr. Lal is on the expensive side. These are the 12-month forward P ratios I'm talking about, and 36 times is what Thyrocare is currently trading at. Let's have a look at the other stocks also, which are there as a peer, and that's where we get them in. Suraksha Diagnostics and Vijaya Diagnostics. That itself is in line with most of the peers. Only outlier, it seems, is the 57 times P. Why is market giving that to Vijaya Diagnostics? That's the question to be asked. But as of now, it's quite neutral from its historic averages. A little bit correction is there, but it's evenly placed. Neither too expensive, neither too cheap. When I talk about the valuations for Thyrocare, maybe wait it out because the stock has run up as well, and maybe if we see some good earnings coming in the coming quarters, the valuations might turn attractive. So net, it's a neutral rating when it comes to the peer comparison. But the last rating is the most important. That's the outlook segment. Let's get in the first reason. The pathology strategy, that remains to be a key B2B service provider. And when you're a B2B service provider, your margins largely always remain compressed. Also, let's talk about expanding partnerships across insurance and ECG. Okay, these are high margin businesses, but this will take time. They have a higher gestation period. And remember, there's a lot of competition in the markets. The franchisee is going deeper into India with its focused test menu, and I'm talking about tier 2, tier 3 expansions also. And it's evenly placed. When I saw the map where most of the labs are located, They are strengthening this network and they are focusing on the larger players. So that's the eventual step to come in. But how much will the valuation premium market give to the diagnostic players? That's the big question to be asked. And they are strengthening their presence in Tanzania. Lab to sirf ek hai, but let's see what options come up or potential comes up in Africa. So net, it's a strong outlook, and I've given this a thumbs up as well. So let's give you an entire revision of the ratings in the show, and largely the company has done well in most of the parameters, be it financial or operational. That is why I've given 4 thumbs up. All 3 numbers they have done well, and operationally also the FY26 numbers has been good. Shareholding, it's kind of nullifying with the promoter selling stake and FI, then DI is increasing the stake. Street cred and valuations will keep it neutral, but outlook remains strong. So let's add up the total rating parameters, and it's roughly coming 6.5 out of 8. So it's largely a positive than the average numbers which we generally give to a company in our KYC show. So that's the entire rating coming in. And Rahul Guha, he's the MD and CEO of Thyrocare Tech. He will be speaking with us, and there are some interesting snippets about him. He has been reappointed as the CMD for the next 5 years as well, and that was just announced. And he's also the MD at API Holdings. So बहुत सारे brands हैं जैसे कि Pharmacy, Ritalio, Docon or Acnamed is something which he's a part of. 17 years of experience in Boston consulting, and of course education coming in from IIM Bangalore. So tune in, we'll be just taking a short break and we will be getting important queries addressed by Rahul Guha.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen, and
welcome back to KYC, and joined in by Rahul Guha. He's the MD and CEO of Thyrocare Technologies. Hi Rahul, it's always a pleasure to have you, and congratulations for being reappointed as the CMD for the next 5 years as well. But Rahul, I just want to understand first and foremost, we are here for the earnings. Very strong Q4 numbers have come in. I just wanted to understand the outlook, and if you can quantify any numbers you're targeting for the next 2 to 3 years.
Sure. Thank you first, and thank you for the compliments on the. I was watching the KYC show as well, so thank you so much for the assessment. Look, our strategy has been working very well for us. Last 2 years consistently, we've been growing at 20% plus, well ahead of the industry. And actually, what you called out in your presentation is really what's working with us, going deeper and deeper into India. Almost 80% of our revenue comes from tier 2 and beyond. Only 20% is metro tier 1. And we see huge pockets of growth where our value proposition of affordable, good quality diagnostics is really clicking with the market there. As well as our partnerships. And today, I think almost every major health tech, insurance, pharma company works with us to be their partner for diagnostics. So I think these two parts are going very well, and that has resulted in 2 years of greater than 20% growth. And as I always say to my team, growth solves everything, right? And operational leverage kicks in. You are able to invest more. You are able to take a bit more risks in terms of new areas. And if they click, then it just continues to grow the growth momentum. I'm hopeful. Of course, we are sitting on a high base now. 2 years of 20% growth is not easy in a competitive industry. So we're sitting on a reasonably high base, but our long-term expectation, I would say, over the next 3 years is mid to high teens, and we expect to, land in that range.
So long-term aspirations is mid to high teen growth. That's pretty much nicely put. And remember, there is a high base also angle to it. But I just want to understand about the diagnostic stocks. All the industry itself, of course, they are doing well. Of course, does it look like the industry is coming out some of an inflection point? Because long enough, a long time, the story was that it's a commoditized industry. A lot of competition is there. But now, Rahul, what changes? Is there any growth trigger happening for this diagnostic industry, or is something building up on the ancillary space where the market is looking differently?
I think overall, I think diagnostics awareness is very high post-COVID, and it has taken some time to mature. But I think, there are a lot of boosts that come. For example, almost every major insurance provider now provides an annual health checkup for free with their insurance policy. So people have got into the habit of now doing an annual health checkup. There are so many health tech providers, that offer you diagnostic testing at the convenience of your home. And it's, available now at a click of a button. So if you go 3-4 years back, you had to walk to a collection center, wait, you would be fasting for 8-10 hours, right? You would do the test. It was quite a bit of a headache. And, if you had to do it on the weekend, then, you'd lose half your day and all of that. So many people kept postponing this decision. Now, at a click of a button in the convenience of your home, within 15 minutes of your booking slot, someone will come and do your blood test and you'll get your report the same day. I think people have realized that convenience is immense, and there's no point pushing off an annual health checkup of a blood test. For example, I'll give you an example, right? A heart attack costs lakhs of rupees should it happen. But if you do a simple cholesterol check of 500 rupees and you take a lipid regulator of 300 rupees a month, you save lakhs in healthcare costs. And I think everyone, insurance companies, corporates, everyone has realized that prevention is the answer. And therefore encouraging their employees.
Right. Rahul, apart from that, I was just reading the key announcements coming in, especially that genomic testing is something which is new. You call something as a specialty diagnostics also. What are the key launch pipelines ahead for this? Because this is a new industry. Of course, the margin profile will be on the higher side. Just wanted to understand what kind of announcements or launches we can expect in the next 12 to 18 months.
Yeah, in routine and semi-specialized, we have made diagnostic testing very affordable and convenient. Our next wave of growth is specialty testing. Specialty testing has been very expensive and very inaccessible. And we aim to solve that with our investments in genomics, allergy, histopathology. We believe that specialty testing should not be unaffordable. Someone who is going through, really a crisis should be able to get the best advice and the best testing from Thyrocare as a partner, and that's where our investments are going. And that is a huge opportunity that we haven't touched at all in the last 2-3 years, but we've now made the investments and we believe we are ready.
Right, and Rahul, I was just checking something else also. The object clause has been altered. Interestingly, some more ancillary services around diagnostics. So there's a lot of word usage of data here. And also there's an investment in Think Health Diagnostics. What's next here? Just give us some kind of a flavor of what's happened here.
Actually, we've seen many opportunities in different areas. It's actually internal to our strategy at this point in time. Maybe in a couple of quarters, you will see announcements related to those modifications. But at this point, I don't want to comment too much about it. But a lot is happening in the ancillary space. And we think, our value proposition can go very far in those areas.
Yes, it makes sense also with, of course, you are having the charge of API also. There's a good capital there, good technology. So I'm assuming there will be some good synergies as well. But nevertheless, the company will announce it in a couple of quarters. So we'll be waiting for that. But let's understand your international expansion part, Rahul. In short, you have made a very small inroad into Africa. But Africa is a huge opportunity for anything, be it medical or even diagnostics. We have already spoke with a lot of peers like yours. So Rahul, how do you see that expanding? Because you must be expanding to much more labs than just one lab in Tanzania, right?
Yeah. As you know, we are very cautious in Thyrocare, and we like to learn the market before we double down on expansion. If you look at us also, it took us several years before we opened the first few regional labs. Today, we are at 40 labs because we know the playbook that works. Similarly, in Africa, Tanzania is our foothold into Africa. I believe if you fast forward 10 years out, the opportunity in Africa will be as large as India. And so we've put our foot there, and we are now learning the market, establishing our African playbook, because we believe that what works in India will not work or may not work in Africa. So we still have a lot of learning to do. And so therefore, we are starting small, understanding the market, what it takes to win. And once we are confident that we've got the right playbook in place, I can assure you we'll expand very rapidly.
That's true, and you keep mentioning playbook because there is a consultant also behind your brains, and it's very lovely to pick your brains like that. But just want to understand the preventive and the lifestyle package. Of course, you spoke about your value-added services, but preventive and lifestyle is much more bigger margin profile, and of course, the client is very niche segment. What kind of offerings are being planned, or do you think that side we are going?
I think the days of the annual health checkup or the generic annual health checkup is gone, right? Most people now know they are diabetic, hypertensive, have some liver problems, some kidney issues. And that's why we have launched Janch, where if you know you are a thyroid patient, a diabetic, a heart patient, these are specialized profiles that are there to help you manage the condition better, be aware of your early warning signs so that you don't end up in a hospital. And I think that is where the future lies in preventive. It's not a generic full body checkup, that people do. I think most people now know what health issues they are dealing with, at least in the 50 plus age category. And we really feel specialized testing linked to the disease profile or the condition that you have is going to be the future of preventive.
Right. So it becomes quite, pinpoint the solutions. That's what you're talking about. But Rahul, it's wonderful. We are out of time, but of course, we'll continue our conversation someday. But it's wonderful to talk with you and a strong set of numbers. So congratulations. It's always a pleasure to talk with you.
Thank you. Always a pleasure.
Yes. So that's the management of Thyrocare speaking about the company's numbers, some interesting trends in the preventive healthcare segment. And interestingly, they have changed their object clause. Expect some announcements over the next 2-3 quarters. That's all, folks, for today in KYC. Stay tuned to NDTV Profit.
केसरिया से मन
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect.
Hello and welcome. You tuned into Markets at 12. I'm Nisha Podar. And yes, Pedilite is on the radar as the stock has really performed well, 2.3% up. In fact, take a look at the 1 month chart as well. This stock has really performed well and the numbers are also well taken by the market. And we will be joined by the management to talk more about the future as well as the highlights. All right, Sudhanshu Vats, who's the managing director at Pedilite Industries, joins in now. Sudhanshu, good set of numbers, but of course in line with the estimates of the market. In terms of the margin, there is a very big jump as well, over 300 basis points. What have been the key highlights and the drivers in this quarter?
We are proud to declare a strong set of numbers for quarter four. I think what has really worked for us are three things. I think first and foremost, our disciplined execution and our field marketing. I think the work which we've been doing actually plays out really well when the demand situation improves. And in quarter four, if you see that there was a little bit of buoyancy in demand in general, I think, Nisha, which you would have heard from other people as well. So we saw that in urban and in rural. So I think that is something which helped us. But within our portfolio, if I was to say, our growth brands, which we look at our portfolio as core and growth, our growth brands, particularly Roff and Dr. Fixit, did very well in this quarter. So I think they had a standout performance. While our core brands did well, and especially Fevicol, which is our largest brand, also delivered double-digit growth. So it's the performance of our growth brands, which was really strong, coupled with a steady and solid core performance. A double digit for Fevicol particularly helped us to deliver a mid-teens kind of underlying volume growth. And I think what happens is, Nisha, the moment you get that kind of growth, so you start getting operating leverage. So 100 bips improvement in gross margin translated to roughly around 300 bips improvement in EBITDA. So I think that's the story of the quarter.
All right, Sudhanshu, of course, Fevicol stickiness we know, and of course its growth momentum has been good. But what about the margins? It has really seen a bump up because of the cost pressure coming down, while the rest of the industry is really basing up for higher costs due to war effect. How is this quarter going to look like? Are these margins sustainable?
That's a great question, Nisha. I think as far as the previous quarter is concerned and most of last year, we actually had benign input costs, and you are right, that helped in gross margin, but then our performance on growth helped in operating leverage, and therefore but we've always guided EBITDA margin, Nisha, in a corridor of 20 to 24%. Pedilite has steadily guided that. Last year, if you look at it, we delivered at the higher end of that corridor, arguably exceeded it marginally. I think we are also facing a lot of inflationary pressure on our raw materials because of West Asia crisis. I think weighted average is roughly around between 40 to 50%. So we are basically, our philosophy is that we will pass on absolute rupee increase in raw material as price increase to the market in a calibrated fashion. We've already done first round of price increase in April. We have done another one in early May. We are going to pass this on in a calibrated fashion. And our desire is to maintain the growth momentum, to stay focused on demand generation and pass on these costs in a calibrated fashion like we've always done at Pedilite. So in this period, we will be having a little bit of margin compression, depends on the length of West Asia crisis, depends on how the demand is playing out for the balance part of the year. But we stay steady on our guidance of 20 to 24% corridor. So I think 20 to 24% corridor of EBITDA guidance will remain, but we are going to manage within that as we go forward.
Right. So, Sudhanshu, price hikes is something that you will take in calibrated manner. Is export decline in the B2B segment also owing to the supply chain constraints because of the war? And what's the picture on exports?
So that's a very good question. Again, I think B2B, the way we look at it, I think our domestic B2B continues to do very well. And I think within that, if you look at our projects, tends to do really well. So our projects business, B2B business is doing very well. Our domestic industrial business is doing well. Our export business has indeed suffered particularly. So there what happened is last year, most of the year, through the year, earlier there was uncertainty around tariffs. And as there was a little bit of clarity around tariff and orders started coming in, and we had the order book, I think supply became a constraint because of the West Asia crisis. So we are ready for a lot of exports, particularly our pigment business has export intensity. I can assure you and I can share with you that we have a good order book. So there are a lot of inquiries. I think a lot of the actual delivery will depend on how the West Asia crisis plays out. So we've got order inquiry. We are well settled for that. The good news as far as Pedilite is concerned, that our export intensity is smaller. So therefore, our overall business growth and overall business will continue to deliver well, independent of the export issue. And if export comes in, that will be the icing on the cake, I think, So.
Right. So it will add more momentum to your already good domestic picture. But what about this year and this quarter's volume as well as value growth? Can you give us some outlook into that?
So we actually always continue to say that we will deliver double-digit underlying volume growth. We want to continue to do that for both segments. If you look at the quarter 4 that went by, we delivered 15.3% or 15.4% rather on consumer and Bazaar. We delivered about 14 odd percent on our B2B. I think our desire to deliver double-digit underlying volume growth for both consumer and Bazaar and B2B remains intact. Early signs we've seen in this quarter, the demand seems to be intact as of now. I've been traveling personally quite extensively, both in big town India and in small town India. And I think as of now, the demand seems to be intact. Inflation is there. But moving forward, depending on the length of the conflict, what will be the impact on demand is to be seen. And that's a conversation to be had as and when that plays out. But we stay very confident of our disciplined execution.
All right. And what about FY27? Give us an outlook on what are the key areas that you're looking at, even CapEx and new units being added.
No, FY27 will be, I think we will continue to do a lot more things. Basically, we continue to work on newer areas which are there. We've already talked about our interest in driving our industrial footwear business. I think that's something which we will do as we go forward. As far as capacity expansion is concerned, we continue to look at capacity expansion. Our capex tends to be in 3 to 5% of revenue. In the year that is coming by, in early part of the year, we should look at our renovated, fully automated, Fevicol plant coming up in West Asia. It's a consolidated large plant which will come up in West India. And I think, in Mahar. So that should happen in early part of FY27. So we stay focused on driving capex for growth, capex for automation and consolidation, and for newer businesses. And I think that's something which will continue. Our focus and will remain on growth and disciplined execution.
All right. Thank you so much, Sudhanshu Vats, for taking all our questions, and all the best for the next quarter. That particular stock is gaining in terms of the kind of volume growth that is seen, and also the demand picture that has really gone on in the last quarter gone by. But the management says that demand needs to be watched out for, as inflation on the ground is very much visible due to war. All right, moving on to another important development today. Hanta virus cases have triggered health concerns across the globe. It is a rare but potentially severe viral disease carried mainly by rodents. Now, humans are infected through inhalation of dust contaminated with the rodent urine, droppings, or even saliva. Now, the World Health Organization has confirmed 5 cases of Hanta virus linked to deaths aboard a cruise ship in the Atlantic Ocean. Let's listen into what Dr. Tedros really had to say about this from WHO, and what is the grave concern about Hanta virus.
So far, 8 cases have been reported, including 3 deaths. 5 of the 8 cases have been confirmed as Hanta virus, and the other 3 are suspected. Given the incubation period of the Andes virus, which can be up to 6 weeks, it's possible that more cases may be reported. While this is a serious incident, WHO assesses the public health risk as low.
All right, so keep an eye out on that particular virus and the health concern emerging globally. Now, there are a lot of stocks which are really buzzing and will be buzzing on the back of the earnings that are really coming in today. What's on your list, Puneet? Have you made a list of all of them that are on your watch list?
Well, Gravitas is the first one. Good set of numbers for the company. Revenue is up 13%, EBITDA is up 22%. And more so at this point of time, the company has decided to enter the copper recycling space. I think that's something that the market will look at very positively as well. Given where copper is, given the price point that it operates at, the capex for the copper recycling plant is 160 crores, and this will be in Gujarat. So watch out for that. They've also continue to maintain a higher guidance as well, because expanded its Mundra lead recycling capacity from 80,000 million ton to 145 million ton, and they're targeting over 8 lakh ton per annum capacity basically by FY29. The second one, Sonata Software, this one was a mixed set of numbers where the revenue was down 17%, so largely nothing too great in revenue growth, and EBIT is just up 5%, and profits largely up 25% because of other income. So actually a weaker set of numbers for the company, where they won 2 large deals, but it's a weaker set of revenue growth, so stock might be under pressure today. And finally, Aditya Birla Lifestyle, recent demerger happened over the last 3 to 4 quarters. So for this one, which operates brands like Allen Solly and Louis Philippe, the revenue is up almost 12%, EBITDA is up 14%, and profits are up 42% in this quarter. Lifestyle brands, which is of course the majority that I've just mentioned and named, the revenue is up 11% for those, almost 1,800 crores. Emerging businesses within the sports vertical also is growing well at almost 18% this quarter. And like for like, retail growth slightly slower at 4%, but e-commerce continues to drive the momentum. So these 3 stocks in focus, continue to monitor them on the back of results.
Right. Thank you so much, Puneet, for getting us all those details. Now, Mahima also walks us through the expectations coming in from Tata Consumer's Q4 earnings. Mahima, growth has been mostly, robust for most of the companies. How's Tata Consumers expected to stack up?
So for Tata Consumer also, it's going to be a strong quarter. That's what at least the estimates are suggesting, because revenue might see a growth of 13%. EBITDA might see an uptick of around 21%, and net profit a growth of around 18.5%. Margins might also improve slightly, because the expectations are that the tea inflation has stable a little bit. But overall, in terms of what to expect, strong revenue growth potentially in double digit. India food business business is expected to show a significant amount of growth, likely to maintain healthy volume on the back of tea and salt business as well. Acquisitions yet again to aid business growth and digital first, because these are digital first acquisitions as well. Key things to watch out for, I think the impact of pricing intervention in international markets is something that we'll be watching out for Tata Consumer, plus the impact of West Asia conflict and price hikes as to how much have been taken, how much will they take in Q1, and overall impact on volume. So this is the overall view of what you can expect from Tata Consumer.
All right, Tata Consumer, that's gaining in trade ahead of their numbers. Thanks so much for that, Mahima. And also a slew of newsmakers that will be in focus today. Shivam has also tabulated a list of those. Shivam, what makes you to your list today?
Well, yes, the first stock that should be in our watch list is the Page Digitech, which has been up nearly 3% in today's session. Now, the company has received an order which is worth 702 crores from Damodar Valley Corporation, and order is for the implementation of a 250 megawatt battery energy storage system project in Jharkhand. Now, the scope includes supply and APC execution commissioning of the projects in a time period of around 18 months, and also following a 12-year period for operations and maintenance. Now, this marks the this is a significant order for the company, as this marks the first BES order win for FY27 for the company. Now, the chairman and MD says the company will be focused on expanding their presence in this high growth segment. Second stock is Vijaya Diagnostics, which has reported a strong Q4 numbers, and the performance in the revenue growth was mainly led by the volume growth, and broad-based growth has been seen across the segments, where it was led by the strong momentum in pathology and radiology segments. Now, the company also plans to introduce advanced genomic testing capabilities, and a strong growth in testing and footfall metrics has also been seen. And as a result, the net profit of the company has been up 37.5%. Next stock is Sandur Manganese, which has also seen a strong Q4 results with the focus on specialty steel segments, and the realizations were led by the manganese ore. Back to you.
All right, Shivam, thanks so much for the entire list. And take a look at Lupin stock after the results. It is seeing some bit of profit booking, 2.5% down. If you take a look at the 5 days or a 1 week chart of Lupin, it had gained in terms of anticipation of good results. Ramesh Swaminathan, the Executive Director, Global CFO, Head of IT and API plus SBU at Lupin, joins in. Ramesh, always a pleasure to speak to you. All around beat when we look at your numbers. It has been a strong quarter. Can you take us through the key drivers? What really impacted well?
So clearly, it is because of the kind of top-line buoyancy that we've been able to sustain with very good performance across various markets. So if you look at America, we continue to have a very good run with products like Mirabegron, Tolvaptan, Albuterol, Spiriva, and of course the inline products itself. When you come to India, we've done very well. Last quarter, for example, we grew by 14.5%. The whole of the year, we of course did extremely well. We serviced the index as well in terms of IQVIA and other matrices. If you look at the emerging markets, I just pick out Brazil, because it's done extremely well. We had products like Dapagliflozin that we brought into the market. Europe continued to do well with, in fact, Albuterol, with Namuscla, and with products like Foster, so that Lufobec. So that did extremely well. So there are good reasons for for good performance across. And of course, the EBITDA margins, they are a result of the top line that we bring in, and of course the constant focus on costs that continued. And the result is there for people to see.
That's right. Margins have also picked up on a YOY basis. But given the kind of cost pressure, the war-led inflation that is being seen, Ramesh, is the margin really going to be sustainable? Give us a picture for the next quarter. And we are halfway through this one. So Q1 FY27.
So America, when it comes to, in fact, products like Tolvaptan and Mirabegron, there would be some competition coming up. As you know, we just ran into, we entered into a settlement for Mirabegron. And to that extent, there would be a reduction in terms of overall profits out there. But there are newer products coming in, essentially Revecti and a host of products when it comes to, in fact, the biosimilar biosimilars front. India will continue to do well with good performance across our major therapy areas, cardiovascular, diabetes, respiratory, and the like. There's some semaglutide opportunity and the emerging markets. So we expect, in fact, newer products to be introduced in Brazil and the like. So clearly, the buoyancy would continue. There are, of course, tailwinds, in terms of course, the geopolitical tensions that exist today. And as a result, there is, in fact, cost increases. Air freight has increased by about 60%. Ocean freights have increased by 15%, not to speak about input costs on raw materials and a host of other things. There's also a question of availability of certain, of key material at some, because of issues around supply chain and the like. So there are some, dark clouds on the horizon. So overall, we are still pretty optimistic about the overall margins that we can kind of sustain. Around the 25% mark is what we think at this stage. But we need to take appropriate action based again on the context from time to time.
So there are many headwinds, Ramesh, that you mentioned. So let's just narrow it down to this particular quarter. You've already seen almost half of it. The war really continues. The pressure points really are emerging. Is this quarter margin going to match the quarter of the previous quarter?
So clearly, we are concerned about the situation as it is emerging. It certainly has an impact when it comes to profitability. It is obviously the various factors that I spoke about, which is essentially input costs as well as, in fact, the logistics cost is certainly going to weigh in. There's sometimes the availability of containers to kind of ship in. Essentially that's going to be a problem. So overall, we are still reasonably confident of a pretty good margin, though of course not necessarily the same levels as you saw in Q4, but pretty healthy, all the same.
A lot of new launches and 15 products have really escalated your momentum and your performance in the last quarter. What are the new launches in this particular fiscal year and their impact on the performance?
I think the most important thing would be the forays that you speak about in terms of biosimilar products for America, Pegdicicep, ranibizumab, and the like, and so on. Clearly, that would be an important entry from our perspective. It'll help us to kind of sustain, overall run rate of above $1 billion for the annualized for the full year. So clearly, we are bullish from that perspective. Though, of course, we do believe that there would be the impact of competition coming in for tolvaptan at some stage and more for mirabegron. But there is, as I said, a lot of scope for optimism.
Right. So Ramesh, a lot of products really in the limited competition space has really impacted your growth, but a lot of products would be going out of the limited competition. How many of them, when, and what would be the impact?
Difficult to say. So when it comes to tolvaptan, we do expect competition to come in, and at least it is not coming in the first quarter. So hopefully, perhaps, it might stay this way for some more time. But we are penciling in that there will be competition at some point. Mirabegron, we've already entered into a settlement. And there are, again, there is a general feeling that there would be competition coming in if they do pay the $75 million as license fees of kinds, which others are also expected to pay. So there could be some competition, and there's of course the pressure on because of the royalties and the overall profitability. So these will have to be factored in.
Now, of course, semaglutide, GLP-1 opportunity, something in which you had a tie-up with Zydus also a month back. You are looking at expanding that portfolio. How are you taking this particular opportunity, and what could be the impact in terms of growth in this financial year?
Clearly, we are bullish about it. We have a very, very large franchise when it comes to, in fact, diabetes products. So clearly, from that perspective, we do believe that we will do extremely well. But there is going to be competition. So there's no denying the fact that there will be a number of players on this. So to the extent it's going to be a bit of a crowded market. But given our edge in terms of the entire ecosystem, so in terms of patient patient support systems, the fact that we also have a digital health which could pitch in some ways. So all of this, because the most important thing at the end of the day is going to be how do patients, along with the doctors, kind of calibrate the intake of these medicines, because at the end of the day, it is, not an easy thing to kind of manage. But given our experience and the overall patient-centric approach that we follow, we're pretty bullish about it.
All right, Ramesh, always a pleasure speaking to you, and thank you so much for taking all our questions. All the best for the next quarter for Lupin. Thank you so much. All right, take a look at the Lupin's stock as well, and that has reached the low point of the trading session, was about 2.3% down, 2.4% down when we started this conversation, and has dipped lower. Also to note that there will be margin pressure when it comes to this particular quarter's performance, and it will not match the quarterly margins that has been really announced for Q4. So Q1 FY27 margins not to match Q4 FY26 margins is really stated, and that is coming on account of a few factors all related to the Middle East tension. That is also airfare, also freight cost, cost pressure in terms of their raw material, and even supply chain constraints when it comes to sourcing some raw materials. So that's the pressure point that is really building and an important guidance for the next quarter going forward, and that's also seen on the stock performance. Now let's take it straight across to PSU major SBI, which is set to report its Q4 numbers today. Let's take it across to our in-house banking expert Shivam for what to really expect from SBI's number. Tell us, Shivam.
Well, yes, the first key highlight points are the margins, which are expected to be at around 3%. And if you look at the deposit repricing thing, that the impact of deposit repricing has also been a key monitorable, as 75 to 80% of the deposits were already repriced in Q3. So their impact in Q4 remains a key monitorable. Now, on the provisions front, there isn't much impact expected, and on the back of that, the credit cost remains. Credit cost is expected to remain stable. Now, however, in terms of treasury income, due to higher yields, elevated yields, we will see a lower treasury income. On the cost of fund side, it is expected to be stable, while the asset quality is expected to improve a bit, with a return on asset to be stable near 1.1%, and advances growth is likely to be led by SME and corporate segments. Also, if we talk about the GNP and NPA ratio, improvements are expected in those, and profit is expected to be at 18,800 odd crores, and NI is expected to be up 9% on a YOY basis.
All right, thank you, Shivam. That particular set of numbers will be closely watched out for today. And let's take a look at the markets as well. Yes, there is pressure that is visible on the markets. Remember, the earnings are also getting digested, and a lot of companies have been incorporating margin pressure coming in and building in for this particular quarter. And that is also getting baked into the overall market momentum, apart from the global cues, which have not been very encouraging. So therefore, Sensex at this point, 0.6% down. Nifty 50 is really trading at the current moment with more than 0.5% downtick. When we take a look at some of the sectors, well, Nifty Bank is underperforming the key indices, and that's also causing a concern when it comes to Nifty 50, where the largest part of the contribution draggers are really coming in from the banking space as well. Well, some of the companies, like from the consumption space, like Asian Paints, HUL, are the ones which are showing green tinge, and also Apollo Hospital, Adani Ports. But on the downside, big boy Reliance Industries along with banks are the biggest dragger and eroding a lot of value away from Nifty 50. In terms of sectors, the ones which are really holding in the green, IT, after being beaten down a lot today, is seeing a good day of trade, and also pharma as well as FMCG. So some bit of consumption play really playing out because of the demand, which has been good in the last quarter. With that, out of time on this edition of Markets at 12, but keep it with NDTV Profit. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better.
Hello, welcome to NDTV Profit. You are watching Trending Stocks with me, Mahima Vachhrajani, and Sharad Dubey, who is standing at the NDTV Profit Market Pit with all the action in the markets today. Sharad, over to you.
Thanks. Good afternoon, Mahima. And just looking at the markets, we had a gap down opening, Mahima, but after that, the market has been, in a range, but of course, trading on a negative basis. We are near the day's low level. And we can expect, this trend to continue in the day's trade today. Nothing much happening unless something comes from the geopolitical segment. Let's pull out the Nifty Bank to see what's happening there. Is it mirroring the Nifty, or is there some more sell-off? And yes, there is more sell-off. The stock, or you could say the index, is down 1% as well. So no major moves which are happening. It's looking like another boring day of trade, and expect the volatility to continue, especially on the geopolitical developments. And Mahima, I'm talking about this as an extended long weekend as well. Nifty Bank's technical still weaker than Nifty, but nevertheless, the medium-term setup is still on the positive side, as everybody is having a wait and watch. The crucial support is 24,100 to 24,150. That's where the two bounces happened in today's trading session. Apart from that, looking at what the trade could be. Remember, the diagnostic and the IT stocks, this trade is seeing a good buying, and across the segment, the numbers have been really strong. And remember to avoid any large trade, carryover positions going into the weekend. Cannot expect, a lot of changes can happen, and that might impact your numbers on Monday's trade. Apart from this, also the small caps, interestingly, Mahima, are outperforming the mid caps and the large caps, and that is showing a good strength, especially on the value buying front. So that is a good point. Apart from this, the risk of sentiment is likely to continue, and it's back. That's what we had earlier in the beginning. The story was different, but now it's earnings. SBI, Titan and Tata Consumer. These are the companies which will be coming out with their numbers. They are in the Nifty. Of course, look at Tata Consumer, the stock is up almost 2.5%. So, Mahima, I'm sure you'll be tracking most of these consumption names as well. But what else is there on your list?
Right, so Shah, definitely tracking those consumption names as and when they come out with their earnings. But I think paint companies, I mean, let's start with our watch list as to what counters are buzzing in trade right now and why. Paint companies are amongst that pack, Asian Paints, Berger Paints, etc. On the back of the Investec upgrade coming on a lot of these counters are seeing a good up move in trade today. Apollo Hospitals is the other one which is buzzing on the back of volumes. Thermax on the back of strong earnings plus data center continues to be the new sector with strong future growth potential for this counter. You have Sonata Software, which is also, in terms of the numbers, fairly well. Margins saw an expansion, 1-2 large deals in Q4 and healthy large order pipeline is what we're looking at into this counter. Vijay Diagnostic, another one with its earnings where growth in revenue was supported by volume growth. A lot of diagnostic companies have done very well this quarter, keep in mind. Thyrocare Tech is the other one where higher test volumes and strong franchisee expansion has supported growth. So this is also a part of the diagnostic pack. In terms of Craftsman Auto as well as Gen Recycling, we're seeing, both of these counters hitting that all-time high, and we'll have to see as to how charts move from here on. The other one in focus will be SBI. As Ashad was just mentioning, SBI, Titan, Tata Consumer, big, nifty 50 names coming out with their earnings today. Probably in market hours, so all of these are buzzing just ahead of their numbers. You also have Shipping Corporation, which has hit a 52-week high right now and buzzing in trade. Kenna Metals, NRB Bearings is are the twin names which are also buzzing on the back of their numbers, where they've both seen a turnaround quarter. And there's Sandur Manganese, where realizations were led by manganese ore on QoQ basis to fully utilize the capacity that they have in terms of permissible annual production limit for iron ore. There's Britannia also buzzing on the back of a weak Q4 numbers. Margins did decline, but management commentary not very negative, on a positive footing. Dabur is the last one in focus on the back of a good Q4 number aided by price hikes is what they've said, but they've gone ahead and said that margins is something that they will be protecting at any cost. So that's with regards to where the watch list goes. But Bharti Airtel earnings are out, and you have that number flashing on your screen up there. Africa Q4 net profit has seen a growth of around 12% at that $199 million. Revenue saw an uptick. So this is, the Africa numbers, of course, in focus. Africa subscribers at that 184 million versus that of 179 million on a QoQ basis. Revenue numbers also flashing on your screen up there, up 3.7%. Average revenue per user at that $9.7 versus that of $2.6. Is that, I hope that number is correct, but EBITDA margins at 50.2% versus that of 49.1% on a QoQ basis. So that's the Bharti Airtel Africa performance that was flashing on your screen. So putting spotlight on the numbers as well. But moving on, Sharad and Shad is standing by as always in the market fit for the rapid fire round. Sharad, over to you.
Thanks a lot, Mahima, for that. Joining us, we are having Akshay Bhagwat here. Good afternoon, Akshay. It's always a pleasure to have you. We'll start our rapid fire segment, but just before that, Bharti Airtel, we saw a good spike coming in from its Africa's numbers. Just a quick chart check on Bharti Airtel. Akshay?
Good afternoon, Sharad. So it's a neutral setup for Bharti Airtel, but till 1800 support holds, you can expect some bit of a pullback from current levels, and if the pullback extends, 1900 can be a short-term target.
Okay, and your views on the paint stocks, Asian Paints, Berger Paints, there's an Investec upgrade coming in. Do you think there is a strength in these paint stocks right now?
Yeah, absolutely. From momentum perspective, 2550 swing highs taken off by Asian Paints, setting up for possible targets till 2675. Berger Paints, strong breakout of inverse head and shoulder bullish pattern at 490 today. Targets around 535 to 540 on the upside.
Right, and just pull out the chart for Thermax. Akshay, very good up move coming after Q4 numbers. Is there more steam left to this rally, or do you think a good time to, partially book profits?
I think 4850 to 4900 is still on, so momentum is strong, can carry forward from BTST perspective.
And your views on Sonata Software, a good gap up opening coming in. On the charts also, it seems like a up move is expected at least in the medium term.
Yeah, strong reversal attempt seen on the charts. Short-term bullish patterns on the charts. Target 315 on the upside.
Right. Good numbers and a bullish commentary in our special KYC show. Thyrocare, that's the stock we're talking about. Stock is doing well. Do you see a good momentum coming in this or the other diagnostic plays?
Yeah, so diagnostics has been doing pretty well, and for Thyrocare Technologies, the move has been pretty much positive today, but I believe one should book out profits if it's short term because resistance of 520 has been hit in opening trades.
Right. For the second straight day, Craftsman Automation has been buzzing in trade. Yesterday, it was the stock of the day by Puneet also. Just wanted to take your views on this. Do you think it's a good time to book some profits?
Absolutely. Overbought on short-term technical parameters. Book out profits. Look for re-entry opportunities around 8600 on dips.
Right. So there's a book on profits coming in for Craftsman Automation. That's the rapid fire segment. Interesting. Over to you, Mahima.
Right, let's now take a look at what's trending in terms of where Google trends go and stocks that are, being most searched on Google right now. Let's try to pull that up. HFCL, Bajaj Auto, Lenskart, of course, on the back of the block deal that, we broke the story yesterday and today. It's confirmed as well. Pedilite on the back of its numbers, strong volume growth, beat in terms of where margins go. And MRF is also one of that heavy counter that's on the Google trends right now. But Akshay, I'll take up two counters from this, right? Lenskart is the one, if you have enough data on the charts to give a perspective, and Pedilite. We've seen good fundamental performance in the last 1 year. FY26 has been good, Q4 has been extremely good, but what are the charts suggesting?
So for Lenskart, first of all, the stock has been in a bit of a downtrend on short-term charts, but it's nearing an important support. 470 is a trading support, around 460 is the 200-day moving average support, although the data is a bit limited. But somewhere my belief is the stock should rebound from the areas of 470 to 460 zone. So the downside looks capped. Be prepared for a rebound. It's a short-term rebound right now, which I'm expecting, and 520 can be on your target list. As far as Pedilite goes, it's more of a buy and hold kind of a stock. Short term, it's tested a resistance in the opening trades. So in all likelihood, small correction till 1450 can unfold. But if you give this time 3 months plus holding, then overall 1600 to 1650 are the targets still open from a medium term perspective.
Okay, all right. So that's the view coming in on Lenskart as well as Pedilite. But Titan is another one that is in focus today on the back of its, the expectations of its Q4 numbers, and it could come anytime soon now because they're having their con call at 3 p.m. today. But overall, the expectation for Titan is that the revenue might see an uptick of 26% odd. EBITDA may rise around 34% odd. Margins may be at that 11% mark, which has been the case for the past so many quarters for Titan now. The question really here would be as to when margins start to pick up. Net profit might see an uptick of around 46% odd. As per the Q4 business update, just to give a recap of that, consumer business saw a growth of 46% odd. Domestic business saw a growth of 42% odd. Jewelry business a strong growth of 46% with a like-for-like growth of 48%. In terms of buyer growth, that after 3 quarters has seen a high single-digit growth in terms of buyer growth as well. Watches saw a growth of 7% odd. Eye care saw a growth of 16% odd. Emerging business has been doing very well. Fragrances 30% growth. Women bag 47% growth. However, Taner is still something that's lagging behind. A downtick of 1% is what they've seen this quarter. But I think international business has also done fairly well. Overall, it's growth of 156%. North America business growing at 50%. Middle East business, of course, did get impacted because of the West Asia conflict, but overall, GCC business has seen a growth of around 37% odd. I think key things to watch out will be in terms of volume growth as to how much that has been, that plus the percentage of buyer growth that we're expecting, and how Middle East has impacted the overall performance in terms of how it is expected to impact going forward as well, and margins commentary from here on is something that we'll be watching out for in Titan. Akshay, your view on the charts for Titan?
Technically, still overall the broader view is positive. It's just that the stock has lost momentum in the last couple of weeks in terms of the acceleration move on the upside. My belief is still 4200 support holds. It's still a positive chart, and you can continue to hold on to the longs today being the result day. If it holds the support, sees a bounce back respecting the support, you can be again prepared for targets of 4500 plus.
Okay, Tata Consumer is also the other one from the Nifty 50 pack that is in focus. Earnings today, of course. What are the expectations? Where the expectations are that revenue might see an uptick of 13%. EBITDA will grow faster than revenues at that 20%, 21% mark. Margins might slightly improve to 14.4%. And net profit might see an increase of 18.5%. Now, strong revenue growth potentially in double digits is what we're expecting. India food business is expected to show significant growth, likely to maintain healthy volume growth in the core tea and salt business. Acquisitions will aid business growth from here on with regards to the Organic India acquisition. Tea inflation could see some impact on the margins. That's something that we'll be watching out for in terms of how margins fare this quarter and what the outlook looks like going forward in FY27. But I think impact of pricing interventions in the international markets is one thing for Tata Consumer, which is a key. The other aspect is impact of West Asia conflict. How has that been? What are the price hikes taken? What are the price hikes going to be like in Q1? And what is the volume growth going to look like? These will be the key things to watch out for when it comes to Tata Consumer. Akshay, that's the overall view of what you can expect from Q4 numbers, but what are the charts indicating?
See, we are nearing a very strong resistance zone for Tata Consumer product. 1200 to 1220 is that zone. If that zone is overcome, then you can expect a massive breakout. But till then, it is more of a neutral setup. Right now, 1140 is an important technical support. Till it holds, you can expect momentum to regain. So continue to hold till it trades above 1140. That's the recommendation on charts.
Okay, so that's of course the view coming in on Tata Consumer, but let's also take a quick look as to how the markets are doing at the hour. You have your Nifty 50. Let's try to pull that up as to where it is trading at right now. There you go. It's down by about 0.6%. The Bank Nifty, as Shahad was mentioning earlier as well, was down by about 1%. So not in tandem with the benchmarks, at least at its day's low point. 55,400 levels is what we're seeing on the Bank Nifty right now. But Biocon, let's try to pull that up and see as to how the earnings have fared. Q4 earnings have definitely surprised on stronger footing. We've seen beat on low expectations. Q4 FY25 had a higher base, but CRDMO revenue grew only 2%, limiting overall growth. Revenue saw an uptick of 2.3%, EBITDA down 5.4%. Margins at 22.6%. But in fact, my colleague Varsha spoke to the management and listened to that conversation.
When it comes to biosimilars EBITDA margin, which was almost 26% in Q4, how much is this sustainable? What is the expectation when it comes to these margins going ahead? And if you could also help us with the growth outlook when it comes to your biosimilar, considering the change in product mix and of course the new launches and also the operating leverage.
Yeah, well, first up, Varsha, thank you for having me on your show. It's always a pleasure. The quarter that's gone by has been another tremendous quarter that we've had. Very strong showing, as you rightly said, on a like-for-like basis. We've had good growth on both our biosimilars business as well as our generics business. The biosimilars business particularly has shown exceptional growth year on year, 16% in revenues. We've got a 40% growth in the EBITDA. So clearly a very strong set, like you said, on the biosimilar side. On the generic side, if you look at it, if you were to again look for the base business, we've seen an improvement in margin both year-on-year basis. We've seen growth in revenues, almost 13%. And on 300 basis points improvement sequentially over the previous quarter. So again, that business also is pointing in the right direction. So I would say that the quarter was underpinned by North America and our oncology business for the biosimilar side of it, and the peptide and the US or rather ex-US for the peptides in the generic side of it. So quite diversified and very focused in terms of margin profile. You talked about whether the mid-20s is a sustainable EBITDA margin. I would say very much so. We've had quarters where it's been higher, but we've always guided that we will be in the mid-20s on the biosimilar side, and that's where we are.
Right. So, continuing on that point, when it comes to margins of biosimilars, could biosimilars eventually become a 30 plus EBITDA margin, once utilization stabilizes fully? I know this is not possible in the in the next 1 or 2 years, but talking about the medium term opportunity, can you see biosimilars margin going at around 30% plus?
Yeah, I mean, certainly in the mid to long term, these things are all possible, particularly when you have new launches that will stabilize over a period of time. Because as you know, in the biosimilars business, you don't see an immediate reflection of a new launch into the numbers. It takes several quarters before you actually start seeing your product reflecting in the margins. So I would be quite hopeful. The near-term signs of this are that your gross margins are strong, and that's what you're starting to see. Your costs are moderated, which is why your EBITDA margins have started to creep up from the low 20s to the mid 20s. And the reason for that is you have an operating base which is not growing even as your revenues have grown. So that's the operating leverage that you see flowing into your EBITDA. And which is why we feel very confident about the mid 20s. But in the mid to long term, for it to move in the direction of 30 is not an impossibility.
Right. No. So, Mr. Tambe, where I was coming for this is biosimilars globally are becoming increasingly competitive with pricing pressure intensifying. How will you defend your margins while continuing to scale the market share when it comes to these products?
Yeah. So I think the first piece is that the fact that there is increased interest in the biosimilar space is a validation of the thesis that we had presented more than a decade ago, when there wasn't anybody looking at this at all. So at that time, we were the first movers, and we said very clearly, this is where the next wave of opportunity is going to be. And now you're seeing that happen. You're also seeing companies announce acquisitions and starting to make investments in that direction. We're seeing hurdles come down in terms of development costs. So the industry is headed in the right direction. Now, how do we maintain your lead? Well, we've already invested significant amount of time, energy, effort, talent in developing our position and getting up to this point. We believe we at least have a 5-year head start, both in terms of capability, other in terms of the investments we made, just from a time value perspective. And more importantly, if you were to look at the full integration that we built from a business standpoint, which is development, manufacturing, and commercial capabilities, that allows us to leverage across the value chain. And that is something that is not something that can be built overnight and will allow us to create enduring value.
Right. And, what is the next major biosimilar opportunity, Mr. Tambe, that you believe can, materially move the revenue needle for the company?
Yeah, and again, like I said, we've not got any one bet that you would play and then it would be a hit or a miss. We've got several products that we are launching in the coming fiscal, in the current fiscal now. So we are looking to see that these ramp up in a steady way, because this business is something that delivers enduring margins, like I said just a bit ago, and we focused on that. If you've seen the products we've launched 8 years ago, they still deliver significant margin contribution and have held a fourth of the market share, which is 25% and more. So that's the business we are building. It's not a flash in the pan. The idea is to build a business which can deliver lasting returns for more than 7 to 10 years.
Right. Quick 2 questions, Mr. Tambe. One is, of course, you also highlighted that the deleveraging progress and interest savings are beginning to accrue. What is the medium-term target for that? And also wanted to understand how important is the GLP-1 opportunity for Biocon over the next 5 years. 2 quick answers on this.
So first is the interest savings of 300 crores is what we expect to accrue this financial year. So that's as near term as we can get. And we expect to start seeing that in this quarter itself. It started accruing from last quarter partially as we concluded the acquisition of the minorities in BBL. But now you will see the full benefit of it play out in fiscal year 27, with roughly about 75 crores starting to play in the interest line in Q1 of fiscal 27. So that's the immediate position. Our debt EBITDA ratios have already moved from over 4x to less than 3x. So that's another significant indicator on that. So that's your question number one. The second question in terms of the GLP-1 portfolio, again, a very synergistic portfolio to our insulins pipeline. We have a leadership position there, as you know, and we believe that this will complement it, developing a diabesity profile in a portfolio which is very differentiated from ours.
Well, that's the management of Biocon. Akshay, I just wanted to get your views on the charts for Biocon as well. Of course, there is a slight positive momentum in the stock, but do you think this will sustain going ahead?
There has been a good move on charts, and for short term, it's a bit difficult that it will sustain. There might be some sideways action before the next leg of upside resumes. So I think from a positional perspective, 1 month plus holding, it might make sense to continue to hold because the support is 350. But for short term traders, it's an exit. Wait for dips around 370 to take re-entry opportunities.
Right, Akshay, SBI is also coming out with its numbers today. Initially, what are the chart levels suggesting here? Of course, we are seeing some kind of a volume build-up also. Could you give us the key levels for SBI?
So as of now, it's a neutral setup with 1120 being the upper end of the range and 1050 being the lower end of the range. It's expected to be within this range, and at this point, there is no trade which is seen from a risk-reward perspective. Let either side of the range break to take a fresh trade or re-entry in State Bank of India.
Okay, so it's a kind of a wait and watch right now until the numbers start coming in, and that's where we'll see the reaction in the stock. But another stock in focus is ABB. Just the numbers are expected to come. The revenue growth, it's likely to get aided by 2 segments. The first one is, of course, the electrification and the motion segment. The robotic divestment is something which the street will be watching out for. And also, the process automation segment, that's expected to remain weak when it comes to overall numbers. The margin pressure is likely going to be there, of course, for the commodity inflation, which is largely known in the markets, and a strong order inflow and backlog growth. That's where the bullishness is coming. You can see the numbers also, the expectations coming in from ABB as well. Just wanted to get ABB on the charts as well. Akshay, how is the positional setup looking like for ABB, and also if any other capital goods stocks is there which is attractive right now?
So the broader setup is still positive. Lately, 5-6 sessions has seen a slight corrective action, but my belief is around 6,800 to 6,900 zone. There should be another rebound attempt or buying action in the stock. So continue to hold. Possible upside targets are till 8,000.
All right. Thanks a lot, Akshay, for your time. Of course, we had a wonderful session, rapid fire, and the other stocks as well. It's always a pleasure to have you. But now we are running out of time. From me, Mahima, and the entire team who put together this show, it's a thank you, and stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
Breather on Dalal Street as Nifty closes in the red near 24,300. Broader markets outperform with FMCGs, PSBs and IT indices being the biggest laggards. Traders expect to end the week on a flat note. FMCG majors Dabur and Britannia announced Q4 numbers. In line set for Dabur while Britannia misses on revenue expectations. Lupin delivers a strong quarter while Biocon results show steady growth. And amid looming health scare related to another virus spread, the World Health Organization has said that 5 cases of Hanta virus have now been confirmed in relation to an outbreak on a cruise ship. Many more may follow. That's the warning coming in due to the virus's 6-week incubation period. And moving on, then let's talk about oil prices that are sliding for the week as diplomacy still holds the upper hand. Despite fresh US-Iran clashes near the Strait of Hormuz, President Trump insists that ceasefire remains intact at this point in time, keeping markets caught between peace hopes and war risks. Good afternoon. You're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, let's quickly take a look at the markets as well, because it is a largely lackluster day that you're seeing coming in for both Nifty as well as Sensex. And when you talk about Nifty, about a 160-point knock is what you're looking at, as you can see on your screens as well. Sensex, that cut is in fact much deeper, more than a 500-point cut that you're looking at right now. When you talk about the broader markets as well, they're slightly outperforming benchmarks as well. So that's largely the kind of picture that you have right now. But let's also talk about some of the sectors that are in focus right now. So it's financial services that's on the back foot. There's Nifty Bank, oil and gas, PSU Bank, energy, metal, and realty, exactly in that order. Those are the sectors that are under pressure. What's holding up a little resilient at this point in time is perhaps IT, FMCG, pharma. So those are some of the sectors as well that are holding on to a little bit of gain also coming in. But when you talk about the list of losers, something like a Dalmia Bharat makes it to that place from within the broader universe, with about a 6.5% cut also coming in. But when you talk about the Nifty 50 picture as well, about some of those losers like HDFC Bank, that's one heavyweight that's trading under pressure, quite under pressure right now. Coal India, Bajaj Finance, Axis Bank, Ultratech Cement, ONGC, as well as Hindalco down anywhere between 1.5% to 2%. When you talk about the list of top gainers as well, Tata Consumer up about 2.5%, Asian Paints, Apollo Hospital, Quality Walls, as well as Adani Ports. So those are some of the gainers from within the Nifty 50 complex. But when you talk about the entire commodities complex as well, that's also something that's very much in focus as we speak as well. Let's also quickly take a look at the roundup that we have coming in terms of oil prices as well as gold right now. Oil prices, of course, slumping with that Brent also slipping, and that's something that you're seeing coming in. In terms of oil prices, when you talk about gold prices, they're rebounding on the flip side. So that's largely the kind of picture that you're looking at right now. But with that in mind, let's also get you a check going in terms of what you can be expecting going forward, because as you can very clearly see, Brent is just back above $100 a barrel. When you talk about US WTI as well, a little bit of strength that you're seeing emerged on that front as well. But let's also get in NS Ramaswamy, head commodity desk and CRM at Ventura, also joining us on the show right now. Thank you so much, sir, for taking time out and joining us this afternoon. And first things first, I wanted to try and understand what you really think about what's happening with oil as well, because it has been a very volatile week. On one hand, you do have the entire war premium that is just slowly starting to also recede just a tad bit. How are you looking at all of the triggers that we've gotten in the week gone by thus far?
Crude oil is again, the news is only about how the talks are going to really happen and potentially how Iran is going to respond to the proposal which has come up. So basically, it's totally volatile. The moment we don't get to hear anything positive as regards the talks or the proposal that has come up, we immediately see WTI as well as Brent going on the upside. However, the floor has already been formed. When you talk of WTI, we don't see it crossing $99 or $100 per barrel. If you talk of Brent, again, maybe 105 looks like to be a floor. But again, if the peace talks and other things were to materialize, we are really going to see, by the way, even moderation can come up from the China discussions and China interfering or giving a view that the peace talks has to really translate into opening of the Strait of Hormuz and the supply constraint should be removed. In that case, we are going to see another 8 to 9, 10% fall in the WTI crude. So it's just a matter of unknown and uncertainty prevailing in the energy segment. One cannot predict how things will happen, but definitely a floor has been formed and it can come down and get corrected to maybe $85 per barrel in WTI and probably close to $90 per barrel in Brent if something positive really happens in the energy talks.
Well, absolutely, and that makes sense in terms of how you should be looking at prices as well. But, do you think that higher for longer oil prices is a reality that you're looking at right now when it comes to oil prices? And do you also think that the base for oil prices has changed just a little bit because of the war right now? Because the way that we were looking at oil prices perhaps seems to be a little different right now.
Absolutely. The floor, as I said, the current volatility and the floor is what I was talking about. But the higher side of the price is bound to remain. It has to actually translate into usage. It has to really translate from the Middle East and to the various Asian economies and Europe and everywhere. And then only we would see some correction. So we are not going to see a very high going forward when we are talking of a medium term, 3 to 4 months down the line. decline. We are not going to have a pre-war type of price levels. The energy segment price of crude, WTI and Brent are definitely on the higher side. It will remain on the higher side, but certainly over a period of time in the medium term, it can get corrected to maybe post-war session of maybe 75, 80 range. That would be the price which we have to accept, and the world has to move on with that higher level of oil prices, because there is the shortage is already seen. There is no extraction happening because the storage is already full. So there is no further production that is happening. So there is bound to be some supply constraints that is bound to come up in the medium term.
No, absolutely. And thank you so much for helping us with that update also coming in terms of what we should be looking at for oil prices as well, for the base as well. That is now to be looked at very differently. But, when you talk about gold as well, there's a little bit of indication that we're getting in terms of China also stepping up their buying. And the central banks, of course, were a key trigger in the bull run for gold in 2025. Are you looking at it in perhaps the same light for this year as well right now that we're, firmly looking at that sort of indication also coming in from BJ?
Absolutely. That said, we need to immediately see the short-term impact. Like today, Friday, we have got the US non-farm payroll report, which is coming up. So gold is actually positioning ahead for this non-farm payroll data, which is coming up. It is very well supported by a lower yield, which we have seen the 10-year treasury yield from 4.37 to 4.38 level. It has actually got corrected to close to 4.3334. So the lower yields and probably the dollar correction, the USD correction in the dollar index declining is definitely giving a support to gold. And basically the volatility in gold has begun after a very, very compression period which was there in gold, close to $4,600, $4,580 per ounce. It has really bounced back. The volatility has begun again, and it is trading above the resistance levels of close to $4,680 level per ounce. So now it is quoting at around 4,730. We are expecting gold to now rally further, excepting for one negative, and that is going to be the headwind, is going to be the interest rate. The rate cuts, whether it is not likely to happen looking at the inflation and other triggers which are coming up. So that is a persistence higher interest rate regime could be a headwind for gold. But then the volatility has picked up and gold is on the move. ETF has recorded again a strong buying spree and an inflow has started. And as you rightly pointed out about central banks, that is also going to give going forward for 2026. It's definitely gold is a good asset class one has to look out for.
No, absolutely. And, if somebody already has chips on the table or if they're looking at fresh buys right now, given that there's this kind of heightened volatility that we've also seeing, even for gold prices right now, the entire safe haven demand picture has drastically shifted ever since the war began. How are you then on both of these counts looking at gold prices?
Absolutely. We are in fact seeing that should be a strategic for an investor outlook. If you were to see, there has to be a strategic asset allocation. The general 10% rule which we talk about in a portfolio, we need to have between this 5 and 15% allocation to gold over a diversified portfolio is what is really maybe a conservative investor looking out can lean towards maybe 12.5 to 15%, but a very aggressive investor who is looking out for risk on assets, they can probably park gold with around 5%. But again, the 10% rule for an investor goes on. There is a gold which works out, ETFs can work out like an SIP, and there can be a constant purchase on every small correction that or dips that we can expect whenever such situation arises. So I think that is the holding pattern has to be constant in gold. Nevertheless, there is never a reversion that is happening in the price levels. So there is no question of anybody going to quit the positions in gold. In fact, that has to be added on constantly in a staggered manner.
No, absolutely. Staggered manner, that's the keyword also coming in. Thank you so much for taking time out and joining us this afternoon. So there you go. That's how you should be really staggering your gold purchases as well. But with that in mind, it's time for a very quick break right here on Lunchtime Trades. More news and updates on the other side.
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m.
Welcome back. Thank you so much for staying tuned in. Let's talk about BSE that continues to fire on all cylinders, delivering another quarter of strong outperformance as well. You're looking at profits, revenues and margins that have all beaten estimates, in fact. And that's driven by a sharp surge coming in index options trading and operating leverage that has been kicking in. In fact, my colleague Sharad Dubey caught up with the management. Let's go across and listen into a slice of that conversation as well.
Just wanted to understand, how did these numbers come up, and if you could just give us some operational angle to it as well.
Well, as you know, BSE started its derivatives journey only just 3 years before with the relaunch of Sensex derivatives. The product was well supported by the market participants, and the last 1 year there has been significant amount of growth in some of the parameters, which has helped in the performance of the contract. The number of members went up by around 140, 150. The number of FPIs almost became 5 times what it was before. We have increased the number of co-location racks. Because of the expiry changes, what happened was more and more volumes started happening, not necessarily only on the expiry day, on the remaining part of the day as well. Some amount of trading increase has happened in the monthly contract volumes, which is another very good contributor for the top line and bottom line. So all these factors has led to a wonderful performance in index options. But there has been no overall growth. Equity also did well. And in the mutual fund area, we had record number of transactions. We had record number of SME listings. And we also had a good amount of colo offtake, and therefore the costs associated with colo were clearly taken care of. And index business went up significantly well and has started doing very well. All this has contributed for the success and the numbers of BSE.
Right, and of course we can see that in the numbers playing out. But I just wanted to understand a little bit about the April and May trends when it comes to your operational parameters, and also the market share gains has been there. If you could just give us a flavor of the market shares.
BSE has always been taking the stand that we are not looking at market share as the parameter for us to track in respect of equity derivatives. Market share, as you call it, actually is between apples and oranges, because the products are unique. So how can we make the comparison between two different products and say this is what is the market share has always been our view. Our parameters has been that how much you are deeper and how much you are broader in terms of market and the product. That is what we have been concentrating on. As well as April and May, what you are talking about, May is too early. Compared to the last March, if you look at it, the April volumes, the ADTV has almost become twice the number. If you look at May 23, 24, 25 and April 26, May 25 to April 26, the ADTV of premiums has almost doubled. From around 15,000 crores to 33,000 crores. That is a very good parameter. The number of contracts traded has gone up from 7.8 crores to 17.6. Future ADTV has gone from 368 crores to 777 crores. And the peak OI has also increased by around 50% from 60 lakh lots to 99 lakh lots in the index option segment for us. The number of UCCs who are registered with us has gone up, while 33 lakh UCCs, regular participation we are seeing from 3.5 lakhs people. The expiry day concentration came down from around 70% to 80% to somewhere around 40% to 50% now.
Right. Right. Ramamurthy sir, let's talk about the launches also. Could you give us some hints about your new product launch? It's there on the focused IT index futures and options. It's an exclusive derivative index in the country. Just a little bit details about it, sir.
Wonderful question that you have asked me actually. Focused IT is a special type of an IT index. When we were talking to the market participants about a new product, one point that came out was post this AI revolution that is happening, IT scripts are seeing a lot of volatility. More and more people have IT stocks in their portfolio. If they want to effectively hedge their portfolio, they were finding it very difficult with the existing index. So they wanted us to coin a new index and launch products upon them. So based on the market feedback and also in line with the guidelines for SEBI on sectoral indices composition, we constituted this index, which ensures not any one security can sway the index. It is a free float market capitalization weighted index. But it puts a threshold of max of 20% on a single stock as a representation, and 3 stocks put together not exceeding 43%. Therefore, it is a sort of a balanced, focused IT index, which will help the market participants in terms of volatility that they are seeing because of the global crisis and global volatility and the increase in the AI use and its impact on the IT industry. People will be able to effectively use this, is what we feel. And so we are launching it from May 11th onwards as required by the market participants.
Right.
After taking approvals from the regulators.
Right. Ramamurthy sir, I just wanted to ask a long-term view. This has been for the last 3 years. The Sensex derivative is celebrating almost 3 years of its relaunch. What are the success metrics looking like? How has the journey been? If you could just reflect on that.
Honestly, this answer will be a repetition because this journey has been from 8 brokers and 28 clients on the first day, and no software vendor, front office and back office supporting BSE, and with our system capability maximum of around 10 crore orders processing per day. Today, where we stand, we look at 571 members, more than 500 plus FPIs, and a very active market. And the capability for us is to handle around 1,800 crores orders, 1,800 crores orders per day is our capability today. And we are utilizing at least 40 to 50% of it on a regular basis. And our order per second management has also significantly gone up to around 22 lakh crores at this point of time, 22 lakh orders per second. So clearly there are a lot of improvements in technology, in the peripheral systems, in the participation, the support from the software vendors and back office vendors, the support from the market participants in terms of brokers and FPI, all this has contributed to the success and great journey of 3 years of BSE.
Right. And the last question, sir, is of course we spoke about the past, but the future for FY27. Which are the new areas where BSE would be going through? Of course, we spoke about the launch of your index, IT index futures and options contract, but what else is there? Any other important instruments being introduced?
See, we are introducing more products in IT, in derivatives, that is for sure. And also we want to grow the market for equities. Unfortunately, though we are today having the regulatory capability to have a common contract note, somehow many of the market participants are not still using best price execution and become exchange agnostic because their approvals for SOR apparently are pending from other exchange, because of which they are not able to implement it. We wish that this changes and the people are able to become exchange agnostic and take the benefit of fair prices and at all venues that are available, and therefore the markets overall grow. We feel that this will be a complementary thing for the market, not into cannibalistic. and therefore overall market growth will become imminent, and thus therefore bring in more liquidity, more capital formation, and better economic development. That will be one area. And mutual fund is another area where we will continue to concentrate upon, apart from just simply having more products in the index option segment.
Alright, then there you go. So that's the word coming in from BSE that is firing on all cylinders, at least when you talk about the results and that strong outperformance. When you talk about the stock, of course, it's trading with a cut of about 1.5%. But what's doing well right now from within the Nifty 50 complex is something like an Asian Paints with the 2.5% uptick also coming in. And a bunch of your paint counters, in fact, doing well, just like Asian Paints. So Berger Paints up about 5.5%. Quite some trigger also coming in terms of Investec's view, and it is making it to brokerage radar as well when you talk about some of those paint companies. So it's an upgrade coming in for Indigo Paints, where they've hiked the rating to buy as well, Kansai and Aerolac as well. And Asian Paints and Berger Paints also a rating upgrade that is coming in. And in terms of the target price, when you talk about just the target price, you also have Indigo Paints, where they've hiked the target price to somewhere close to 1,200 rupees. That's largely the kind of picture that you're seeing coming in for some of those paint counters. But when you talk about the peak competition, that's also something that Investec is talking about, where they're saying that that seems to be behind for some of those paint counters. Incremental market share, that's also something that they're talking about in terms of how it's going to be moderating on some of the newer players, and that's also something that you're going to be seeing happening. Lastly, when you talk about Birla Opus, it appears to be focusing on reducing losses, and that's also something that they've gone ahead and highlighted. But what's happening very clearly is that they've hiked the target prices and ratings across the board. But with that in mind, let's also move on and get to some other news flow as well. And 149 passengers aboard a luxury expedition ship are stranded in the Atlantic after 3 deaths and 8 hantavirus infections. Health authorities, in fact, across 4 continents, tracing passengers who disembarked before the deadly outbreak was detected and monitoring those that may have contracted this particular virus as well. Let's take a look at this report.
Ha concluido la evacuación de todas las personas sintomáticas en Cabo Verde. El barco va a continuar rumbo a Canarias, donde espera arribar en el plazo de 3 días al puerto secundario de Granadilla de Abona.
The Dutch-flagged vessel MV Hondius left Cape Verde Wednesday evening. It is bound for the Canary Islands following the medical evacuation of 3 symptomatic patients. Spanish authorities are preparing for a coordinated disembarkation.
Contará con todas las garantías de seguridad necesarias. Tanto la atención médica como los traslados se realizarán en espacios y transportes habilitados especiales ad hoc, evitando todo contacto con la población local y velando en todo momento por la seguridad del personal de asistencia.
This specific strain, the Andes variant, is unique. Unlike most hantaviruses spread by rodents, this version can spread between people. Experts believe the ship's confined spaces facilitated the transmission.
A partir de que una persona se contamina con el ratón, después cuando tiene su afección pulmonar puede contaminar por vía aérea a la persona que está cerca, que es lo que ha sucedido ahora en el barco, que era un lugar cerrado y personas que estaban difuminando el virus.
The investigation now focuses on Argentina, where the cruise began on the 1st of April. A surge in local cases there is being linked to climate change. Scientists are currently shipping RNA samples to Europe to help refine testing for the remaining passengers. Meanwhile, South African health officials have also traced over 40 people linked to the outbreak so far.
La letalidad es mayor y tiene la particularidad de poder formar clústeres, que haya grupos de personas que se pueden contagiar entre personas. Es la única cepa.
While the WHO states the general public risk is low, the long incubation period means monitoring will continue for weeks.
This is not the next COVID, but it is a serious infectious disease.
The ship is expected to dock at Granadilla de Abona this Saturday. Strict biosecurity protocols remain in effect as international health teams prepare for the vessel's arrival.
Alright, then there you go. So that's an update coming in when it comes to this virus, and that's something that we'll keep watching out for as well. But that's all the time that we have on the show. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Good afternoon, you're watching Small Cap Bazaars on NDTV Profit with me Somit Sarkar and my co-anchor Varsha. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade today, either on the back of price, volume and now earnings as well. So what's on the show today? Firstly, we'll be speaking with the management of RSWM. Now it's on earnings that the company has reported. Its PAT number that the company has reported in the fourth quarter is the highest that we have seen in the last 8 quarters, and the stock is up nearly 22% in the last 1 month. So what's the way forward is the key question that we'll be asking the management of RSWM. Apart from that, we'll be also covering the earnings of Global Spirits. Now, the number on the face of it might look very good, but actually it has missed analyst estimates. The stock is down nearly 10% in trade, and this was largely on the back of lower volume number that the company has reported compared to what analysts were estimating. Even the revenue has been a miss compared to the analyst estimate, and that is the reason why the stock is down here. Apart from that, we'll be also talking about NRB Bearings. It has seen its biggest gain, intraday gain since March 2024. Highest EBITDA is something that the company has reported in at least the last 3 years. The stock is up nearly 13% in trade. And lastly, we'll be also speaking about Surya, the small finance bank. The company has been able to meet its FY26 guidance that it had given at the start of the year. Moreover, for FY27, they have guided a 30 to 35% loan growth and deposit growth is the guidance coming in. The stock is trading at its 1-year intraday high, and there are strong volumes on this counter, nearly 30 times its 20-day average. So this is basically what we'll be doing today on the show. Now, if you look at the market, it's not been a great day. We are down nearly 140 odd points, but market is holding on to the 24,150 level that we have been seeing in market. Now, if you look at the sector indices, on the losing side, we largely have the financial names, banking, private bank index and the PSU bank index. And on the gainer side, we have IT as the one of the major index that have been gaining in trade.
But when it comes to small cap names, the Nifty small cap index is also trading in green despite the fact that the entire market is largely trading in red. So Varsha, which are the key stocks here that have been buzzing?
Well, let me start with First Source. If you see, the stock is buzzing in trade. Good uptick there. There you go. The stock is up almost 17%. Even Sonata Software is buzzing. This is on the back of Q4 FY26 numbers that the company has posted. The stock is up almost 14%. Strong volumes there too. Vijaya Diagnostics, another good quarter for a diagnostic company, and because of that, Metropolis is also buzzing. Good quarter expected. Overall, if you see, Dr. Lal also had good quarter. Even Thyrocare was also, had a good Q4 quarter as well. And on the back of that, all diagnostics company are actually in focus. You have MRPL also in the buzz. Even Electra Green is also buzzing in trade. There you go. MRPL is up almost 8%. Electra is up almost 8%. On the loser side, though, you have CCL Products. The stock is under pressure. It's down almost 7%. You have Vardhaman Textiles, Ratan India, and VIP India, which all these stocks are under pressure when it comes to small cap segment. But one stock which is in focus is RSWM. Now, this is so we are going to speak to the management. This is on the back of Q4 FY26 numbers. Company has posted a strong set of numbers. To speak about more on Q4 numbers, how has the quarter gone by, what are the next level targets that the company has been eyeing to, we are joined by Mr. Rajiv Gupta, who is Joint Managing Director at RSWM. Mr. Gupta, welcome at NDTV Profit. Always pleasure to have you. Just take us through the Q4 FY26 highlights, and how is FY27 looking like for you in terms of revenue and margins?
Thank you, Varsha and Sumit. So this is actually, a good quarter we had. So if you look at RSWM numbers for the year, we clocked a EBITDA of 327 against 233 of the previous year. So similarly, quarter is also best quarter in last 8 quarters. And the journey has been good. As you know, RSWM is a multi-product company. We are operating in yarns, recycled polyester fiber, denim, and knitted fabric. So the challenges in all the businesses have been different. What we did particularly is a better supply chain management, handling the raw material fluctuations, which were really very, very high in this quarter because of uncertainties in Gulf area. So the polyester staple fiber, which is one of the major raw material we have, there were huge fluctuations. So we worked on that. Working capital optimization has been another area which was very closely worked. And if you look at the numbers, year over year, there is around 12.5 CR of reduction in overall interest cost. Then sharper market alignment is one area which we did. We worked on the diversification of market because of the uncertainties created because of geopolitical situations. So we consolidated across geographies as well as segments, worked on improving our product mix, focused largely on higher value-added offerings, and also rationalize our low-margin businesses. So if you look at overall cost optimization in the segments because of the challenges posed by gas prices, freight cost, and all that.
Right. Yeah. But if you could just take us through how have things been so far in April? Have you seen any impact of the Middle East war? Has your cost gone up? Anything on that front?
So it is continuing. If you look at the availability of gas, it is smoothened out. In March, there were challenges in availability. So that is over now. But the cost price of gas definitely has gone out. Similarly, the freights are still on the higher side. So the cost-led pressure is definitely there, particularly visible in our denim segment and to some extent in our knitted business segment as well. But if you look at things are smoothing out in terms of demand, there is slightly better outlook in the current quarter. If you look at numbers in comparison to Q4, April has been more in line with Q4 or slightly better in few of the businesses we have.
Okay, so what could be, can you quantify the impact of the same that we could see
in the first quarter of FY27, given the fact that you're saying that gas cost has also moved up, freight cost has also moved up, or what could be your margins be? Any guidance on that front?
So we, as a company, as I said, we are into 5 different segments. So this poses more challenge in our denim segment at this point of time. But if you look at our synthetic yarn business, which is almost 1/3 of total revenue, it is more a domestic business and do not have that much impact from the challenges. So similarly, recycled polyester fiber that we made is also one which is more for domestic focus and do not have that much impact. So overall, if you look at, we as a company will be able to maintain more or less similar or slightly better margin in current quarter.
And also, if you could just take us through, do you have any exposure towards exports, and in which countries do you export your products?
So we have exposed almost 40% of our turnover comes from export, though this varies from business to business. Cotton yarn business, we do almost half of the sales from export, whereas in synthetic yarn, it is less than 25%. But overall, as an organization, we do around 40% revenue from exports. And we do in more than 60 countries of the world, touching almost all the countries which are importing textile from India. So we get impact in the various countries accordingly. One of the major countries we are exporting synthetic yarn is to Turkey, which is disturbance at this point of time. But at the same time, to other countries in Europe and to Bangladesh and China, the trade is more or less smooth now.
Right. Sir, so in FY26 for the whole year, there was a degrowth in revenue, though margins saw 200 basis point uptick. Just wanted to understand, how is FY27 looking like? What is the growth expected? Will you see a higher growth considering the negative growth that you had in FY26? And you said that margins you are expecting slightly better margins than FY26, right?
Yeah, so if you look at why did we degrow in terms of revenue for FY26, global weak markets and the conditions geopolitical are known to everybody. US tariff was one of the impact. The cotton import duty was another impact. So supply chain disturbance was all there. In addition to that, our internal decision of working on loss-making or less profit-making product was also there. So we closed our spinning unit in Chata, which has resulted in a negative revenue of 250 CR for the entire year FY26. So all that is done. Now in the current year, what we are likely to improve is better utilization in our denim and knit business. And because of the cost-led increase in revenue, increase of cotton fiber as such, increase of polyester staple fiber. So our revenues are definitely looking better in current quarter. So we will definitely improve in revenue if you look at Q1 of 27.
What can be that ballpark number, sir, if you could, help us with for the benefit of viewers?
So it will be difficult to comment on this at right point of time, but I can say it is going to be better than Q4 for sure.
Understood. Also, historically, the company has been viewed largely as a commodity textile player. Now, are you trying to, reposition itself as a value-added, sustainable textile player? Will that be a right one to call for?
Absolutely. RSWM is a 60-year-old company, largely known for synthetic yarns, and that comes as a category of a commodity player. Now, at this point of time, in addition to our synthetic yarn, we produce cotton yarn and melange yarns. In addition to melange, both downstream products of knitting and denim fabric are one of the key growth areas we have. In the current year, we are expanding our knitting capacity by almost 250 metric ton, and we are doing a capex of 92 CR in our knitting business. So similarly, in denim, we are again augmenting our balancing activities and thereby improving our capacities by almost 10%. So all these things basically help us in positioning ourselves in downstream industry rather than purely a commodity or a yarn business. And if you talk about sustainability, that is one of the core values that RSWM and LNJ Group live for. So at this point, around 70% of the power that we use comes from renewable energy sources. We are ensuring zero liquid discharge from all our dyeing operations. We are also going for 100% bio-based boilers in the current year, which is FY27. So all these activities will continue, and RSWM definitely is more than pure commodity and very, very focused on sustainability.
If you look at your balance sheet, over the past few years, your debt has increased. I believe it stands at close to around 1,500 crore rupees, the total debt amount I'm talking about, the gross debt. How do you plan to deleverage your balance sheet, given that you're generating now cash? Will you be deploying those cash towards repaying debt?
You are absolutely right. In the current year, which is FY27, our repayments are having a schedule of almost 197 CR, so approximately 200 CR, whereas normal capex we are planning and this net expansion we are doing will not be granting the fresh loans beyond 90 to 100 CR. So thereby our overall term loan will come down by almost 100 CR in the current year as per the projections which company has made so far.
Right. And also, I just want to understand what % of revenue currently comes from value-added products versus commodity products? And what is the target, that percentage that you want to take to?
So it varies from business to business. In a few of the businesses like our knit and melange, it is beyond 20%, and few of the businesses which are 100% say our cotton yarn or synthetic yarn, it is around 10%. So as an organization, we are working towards increasing the revenue from value-added products. But still, if you talk about numbers are not in very great percentage. Of course, the effort that we have started now will help us in improving these numbers in coming quarters.
Right, sir. Well, thank you, sir. Thank you for joining us and giving us the way forward for RSWM. Well, that was the management, quite confident of maintaining margins despite the cost pressures coming in for the full financial year. Let's welcome in our fundamental guest as well, G. Chokhalingam, founder and MD of Economics Research. Sir, you heard the management. They are quite confident of maintaining their margins and growth going forward. They will also repay most of their debt in FY27 from the cash flow that the company will generate. How are you looking at this counter at the current valuations?
Yeah, I listened to him. It is one of the oldest companies in the textile business. In relation to the industry performance, they have been reasonably doing quite well for decades. I won't be able to find any major negative with the company, but the problem is only with the industry. The industry is highly volatile and margin fluctuation is enormous. Management, as he also mentioned, the captive power, renewable energy, they set up, which is a very key to textile industry. So net to net, it is facing problem from the industry. So whether you take Q4 or you take a full year, there is a degrowth of around 5% in the revenue. And both the Q4 and for whole of FY26, the net profit, jumped mainly because of spurt in other income and also tax write back. So if you net out that impact, the performance is not anything great. So that is in the price also. That's why it is trading around 11-12 PE. I would give at best to hold and keep tracking, that industry prospect rather than what company is going to do. So if industry does well, I'm sure RSWM also will do well.
Got that view. Well, moving on, time to dive into the FNO market setup and the cues shaping in trade today. Let's bring in Sharad for more details.
See that there has been a little bit of change from 1045. Are seeing a little bit of a sell-off intensifying here. Of course, Asian Paints, Adani Ports are holding the fort, but it's largely a stock pickers market. But remember to have a lesser positions as you go into the weekend. Let's just see the long build-up of what's happening here. Two important stocks, Nuvama and NBCC, both of them doing well in trade. A good volume pickup in Nuvama. I expect some kind of a positive development in this counter. Apart from this, short build-up for Dalmia Bharat. There's a sell-off happening at 6%. Britannia also, the earnings impact is there. Apart from this, looking at the long unwinding names, we have Hitachi Energy and Inox Wind. Interesting plays from the renewable space. And lastly, short covering candidates. It still continues what we had at 1045. Coforge and Persistent Systems, the mid-cap IT space, the buying, you could say basket buying is happening. So these are the stocks which should be on a radar in the FNO space.
Well, thank you so much, Sharad, for all the details. Well, moving on, let's pull up Globus Spirits. Let's see what that counter is doing. Well, the stock is in focus. The stock is down almost 11%. This is on the back of Q4 numbers though. But let's bring in Mahima for all the details.
Right, so Varsha, it's trading almost at its day's low point as we speak, and this is on the back of the numbers that it has posted, where overall QOQ volume saw degrowth on account of seasonality is what, of course, the press release states. But overall, a lot of changes in terms of policy with regards to state government is also affecting the company. In terms of state-wise growth in Q4, Delhi achieved 90% of 90% as compared to where it was in Q4 FY25 volume, up 60% from its Q3 FY26 volume. But core markets like Rajasthan and UP has shown a decent amount of growth. Balanced markets, there was one-time rebasing of volumes, and growth from here on will be better in FY27 is what the management has said. Revenue was lower due to reduced per unit price of ENA. EBITDA per litre improved slightly to rupees 8.3, and capacity utilization achieved at 80% after adjusting for UP capacity as well. Now, in terms of where the numbers go, I think overall revenue saw a downtick of 3.4%. EBITDA did see an uptick of almost 71%, but margins, overall, because of that EBITDA uptick saw an improvement to 10.5%, and net profits stood at around 21 crores versus that of 5.6. But I think the main concern here is the volume, which is why we're seeing that downtick coming in, and plus this player is also into the popular segment more and not in the premiumization wave, whereas the entire sector is moving towards the premiumization wave, and that's why we've seen a consistent underperformance in discounter. So this is the overall view of what's happened with global spirits and why it's seeing that pressure.
Right. Thank you so much, Mahima, for all the details. Mr. Chokalingam, coming to you on this global spirit. Now, as Mahima was saying that this is not into the premium products, but management though is expecting good growth from here. What would you suggest to investors considering 10% fall that we have seen in the stock price?
One can hold it in case there is any recovery of again back to 5-10%. One can exit. Basically, I am not that bullish on liquor companies at this stage, because we have seen a lot of state governments are spending a lot of money on the people welfare scheme. So I have a firm view as a student of economics that in future, the liquor companies will have a lot of excise duty burdens, tax burden. And now coming specific to this company, it is a growth company, but the margins are fluctuating widely in the last 4-5 years. And even sales growth is, though good, the profit growth, whether you take last 3 years or 5 years, it is CAGR is negative. And the stock trades around 33. So I would give hold, because stock has already corrected 21% from 52-week high. And therefore, I would give a hold and exit the stock if it recovers 5 to 10%. That's my research view.
Right. The next stock in the focus is Surya Small Finance Bank. Now that stock the company has managed to achieve its FY26 guidance. Moreover, the FY27 guidance that the management has given is quite strong. 30 to 35% growth is what they're looking at. Let's get in Shivam with more details on the same.
Well, yes, the Surya Uday Small Finance Bank has been trading higher in today's session, and the stock has touched one year intraday high. The volumes of the stock has been surged by around 30 times to it when compared to 20-day moving average, and the stock has been trading higher in 9 sessions out of 10. Now, the stock is buzzing on the back of strong Q4 results, and if we take a look at the key highlights, the net interest income and margin has been improved a lot, and on the back of strong credit growth and improved yields. In fact, the bank has achieved highest ever quarterly Vikas loan disbursement, which stands around 1200 odd crores in Q4, and this constitutes around 75% of the inclusive financing book. Now, the bank has also seen a improvement and turnaround in profitability, and asset quality has also improved with stable credit cost, and despite the income from PSLC was lower. Now, on the operating expenses front, the manpower cost has remained flat, and cost as of percentage of asset has dropped on a YOY basis too. Now, if you look at the guidance, the company has planned to open around 100 new branches as going forward for increasing its market penetration. The return on asset is also expected to remain within a range of 1.3 to 1.4%, and as you said, the company has guided for 30 to 35% of loan growth.
Right, Shivam. Right. Titan numbers have come in. If you look at on the face of it, the revenue seems to be a big beat. But we'll have to check why that beat has come in, because it's a significant beat compared to what the analysts were estimating. But on the EBITDA front, it's largely in line. 1,937 crore is the EBITDA number that has come in. Margins have come in weak at 7.2%, and the net profit number that has come in at close to 1,179 as against analyst estimates of close to 1,270. We still need to check why the net profit number has come in significantly ahead of what the street was anticipating. Now, we'll try to get in Mahima for more details on that. But Mr. Chokhalingam, Varsha, what are you looking at?
On to Sumit also, when the company had came up with their Q4 business update, there, if you see the consumer business was up 46%, even there was a domestic growth of 42%. Even the international, the jewelry segment, there was a strong growth of 46%, and the like-to-like growth was also 48%. And there, I think the beat that we are seeing in the revenue, maybe that is the reason. And there was also high single-digit buyer growth when it comes to jewelry, which was after 3 quarters of flat buyer growth. So overall, watches division also grew, 7%. Even there was a good growth in eye care, but I think the consumer business, which was up 46%, maybe is one of the reason what we are seeing the beat in terms of revenue. But Mr. Chokhalingam, how are you picking this Titan numbers, and what were your expectations against, and how are you seeing the numbers?
I couldn't analyze in detail, so therefore right now I'm not in a position to give you. I'm sorry.
But the large beat, what I'm understanding here, is largely because of sale of gold bars that the company has done. But let's get in Mahima with more details on why the revenue is such a big beat and not the EBITDA.
So, Samit, I mean, just the first cut of numbers itself, right? Overall, I think the total income has seen a growth of around 46%, EBITDA growth of around 28%. Margins have come in at the 10.6%, 9.2% if I'm not wrong. And overall, profit after tax has seen a growth of around 35%. So, slight beat in terms of where the revenue and PAT go. But in terms of the commentary coming in, Q3, overall in terms of where the numbers go, there has been a beat in terms of where the margins, the EBITDA goes, that 1937 crore versus that of 2000 odd crore. But in terms of where the margins go, let's try to pull those numbers up on the screen. There you go, EBITDA at the 1937 crore versus that of an estimate of 2000 crore. Slight miss when it comes to the EBITDA number. Margins at 7.19% versus that of 11%. I think margins is where the miss is, and that is why we're seeing that counter tanking. Not sure as to why this has come. We'll have to check the press release once, of course, the numbers come out. But I think prima facie revenue and is a beat, but EBITDA is where the concern is, and margins is where the slip has happened. So that's the first cut with regards to where Titan goes, but we'll get in more details once the press release comes out.
Right, all that. Also, we were actually speaking about the Surya Small Finance Bank also. I would want Mr. Chokhalingam, to view on, Mr. Chokhalingam, your view when it comes to Surya Small Finance Bank that Shivam was, talking about. If you could, help us with that also.
Yeah, there are two unique, performance parameters as far as this small finance bank is concerned. On positive side, first, it's a phenomenal, growth in advances and deposits. Advances have grown on year-on-year basis 29%, and deposits have grown 32%. So it's commendable. But when you come to, the quality of asset, that is where the concern is. The outstanding net NPA, as of March 31st is very high. It's about 4.2%. Gross NPA is 6.5%. So I have not seen, majority of the banks and banks have, less than 1% net NPA, but this bank has got 4.2%, which is a big concern for me. And secondly, if you look at Q4 results also, they have reduced the provisions to 41 crore.
Right, sir. Right. Sir, if you look at SBI has actually come out with their numbers, and the net interest income that stands at close to 44,380 crore. as against the estimates which were around 46,500 crores rupees. So a miss on that front, but net profit that has come in ahead of what the street was anticipating at around 19,000 odd crore rupees. Net NPA, gross NPA at 1.49. Let's get in Parag Thakkar, head fund manager of Fort Capital. Parag bhai, on the face of it, net interest income looks below than what the street was anticipating. Did you get time to check the numbers?
No, I have not get time to check the numbers. I was just so basically, what is the NIM number and what is the loan book growth and QOQ NII growth? These are three numbers I look for, and of course asset quality.
NII seems to be at around 44,000 crore rupees as
so
against.
NII is below estimate.
Yeah, sorry.
So NII is below estimate.
Below estimate. And net profit number is net NPA is at 0.39 as against estimate of 0.35. So slightly higher compared to what the street was anticipating on this front, but we'll have to still wait for the NIM number to come in, which we are still awaiting.
NIM, loan book growth number, NIM number and QOQ NII numbers are very important. So I think we should wait for that.
Right. We are still okay. The stock is down nearly 4% on the back of the sharp miss that we are seeing on the NII front that has come in. Now, NIM number is still awaiting on the street, but apart from that, what I can pick up here is that the provisions that have increased, that have come down actually, that could also be one of the reasons why the street is not quite happy. On a Q-on-Q basis, provisions have come down to 2,870 crore from 4,506. Parag bhai, do you think this could be one of the concern that the street is having, that the company, that SBI has not provisioned for any impact that could come in from the Middle East?
No, I don't think so. I don't think so. Mainly it is the key thing is NII, QOQ NII growth. Of course, asset quality this quarter has to be good. As per expectation, I'm saying the expectation itself was good. So asset quality there should be no issue. The only thing is loan book growth and mainly NIM. Because NIM expected was flat QOQ, which is 3%.
Right. Let's get in Piyush to understand what's he picking up on SBI. Piyush, any clue on what is the net interest margin that has come in here?
Of course, we will have to wait for the NIM number, which actually comes out with the IP. But what we can see is that bank has been able to post above estimate net profit. Its Q4 FY26 net profit stands at around 19,684 crore. The net interest income also is slightly above estimate. It's at around the NI is at around 44,380 crore. The bank has seen a jump in its other income as well. However, the provision, the main net profit actually seems to be boosted by a lower provision if we see YOY and Q1Q both. In terms of asset quality, the headline figures, which is the gross and net NPA ratio, it has actually risen a few basis points. But overall, a stable set of numbers. We need to see overall deposit growth and loan growth. In the provisional figure that had come out, it was up over 14% odd year on year. So a stable quarter for SBI in Q4. We are waiting for the management comments in the upcoming press conference. Back to you.
Right, that's all we are getting right now on the SBI numbers. Two big numbers that have come in the last 10 minutes, SBI and Titan. Titan has perked up in trade from 4,240. It is now trading at 4,000, a good 100 rupees up move that we are seeing when it comes to Titan, while SBI is down sharply in trade, down around 4%. If we have Mahima, we can get in more details on Titan at this moment till we gather more details on SBI. SBI is now down 4.5% in trade, post missing the guidance on NIF compared to what the street was anticipating on the net interest income front. Do we have Mahima here? Let's get in Mahima with more details on Titan first.
Yes, so Somit, we have the segment-wise performance as well. Jewelry business has seen a growth of 50% over where it was in Q4 FY25 at the 18,195 crore. India business has seen a growth of 46% odd. Tanishq Mia as well as Zoya combined has seen a growth of 48% odd. CaratLane has recorded a growth of 22%, which is lower than what it has done earlier, but still a very healthy growth. International jewelry business has seen a growth of 174%. The early initially Q4 business update was indicating a growth of 156%, but it's come better as compared to that. In terms of the watches business, watches has delivered a steady quarter. Analog watches have continued to see overall growth for the division. We've seen a double-digit consumer sales growth supported by good volume uptake is what they're seeing. Overall, in terms of growth, in terms of percentage, stands at 8% for the watches segment. For eye care, the overall domestic business has seen a double-digit growth in terms of that momentum, and overall segment has seen a growth of 17% when it comes to the top line. For emerging business, all the skin, earth, etc. have done, all these brands have done fairly well, and overall the business as a whole has seen a growth of 20% this quarter. In terms of the commentary coming in from Ajoy Chawla, who's the CEO of Titan, they've said that FY26 has been a landmark year. They've crossed 50,000 crores as annual revenue as milestone. The quarter performance was led by Festival of Demand. So basically what we've seen is that studded in the commentary is reflecting that studded has also picked up from here on, because Q4 business update was indicating that there is buyer growth coming in for studded as well, and that's what is indicated in the commentary as well. FY27, they're saying that optimism is back on exceptional FY26. So they're saying that even on a higher base of FY26, they're going to do fare well in FY27, but they'll be watching out for the geopolitical scenario, considering Middle East. They have exposure there. Recent acquisition of Damas is also one of the major things that we'll be watching out for going forward where Middle East conflict is concerned. So this is the overall view of how things have fared for Titan. Well, the stock is now at its day's high point as we speak, up 2%.
Right. Mr. Chokhalingam, did you get time to look at the SBI number? The stock is down nearly 5% in trade. What could be the major disappointment here? The NI number coming below estimates, or the bank not doing any provisions for Middle East war?
No. Actually, on asset quality, there is no concern. I saw the number. They reduced the provisions, but it should be worth noting that the net NPA, they have not compromised. It is same 0.39% like December quarter. On year-on-year basis, it is down. And even if you look at outstanding net NPA in absolute term, it has come down. So they have not compromised on the asset quality, though they cut down the provisions. And point two, the business numbers are good. Advances have grown about 17%, which is very difficult for a leader like SBI to beat the industry. That also one should give credit. But what went wrong is basically the treasury segment. The bond yield rise must have affected SBI very badly. So year-on-year basis, the segment results from the treasury operations is down very badly. That is what pulled down the SBI performance. But I am sure, this is very temporary, because we know as and when the oil price crashes and, the inflation moderates, and therefore yield moderates, SBI will come back. It's a very attractive stock. I would say that it's a good opportunity for buying the stock for medium to long term.
For that view. Well, let's also invite Gaurang Shah, Senior Vice President at Geojit Investments. Gaurang, welcome at NDTV Profit. How are you viewing SBI results? What would you advise to investors?
So, thank you so much for having me on the show. Good afternoon to all your viewers and to all of you. All standard disclaimers in place according to SEBI regulations. We do have a positive coverage on State Bank of India from a long-term point of view. That's again a disclosure. And as Mr. Chokhalingam was mentioning, even I feel this is a knee-jerk reaction to the numbers. I don't think there is systematically something wrong in the numbers. I'm sure one-off numbers cannot be a reason for your long-term investments to make any changes as far as SBI is concerned. So we do have positive coverage and we are recommending him.
Right, Gaurang. Thank you for joining us and giving us your first cut on SBI. Thank you, Mr. Chokhalingam, also joining us and giving us your perspectives on the stocks that we discussed today on the show. Well, with that, it's a wrap on this edition of Small Cap Bazaars. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.